Good morning, everybody. Welcome back to another episode of The Market Open. We are live. It is Monday, August 17th. Thank you all for being here. We are back to Monday morning. We are back to the third week, or starting the third week of trading for August. It has been quite the last 2 weeks, and we have so much to talk about in terms of what has happened over the past 2 weeks, but also what has happened over the past 2 days. Because honestly, a lot of stuff happened on Friday. Didn't do the market close on Friday. We got all the 13Fs. So we have to review and kind of talk about what those 13Fs were like and kind of the implications they have on the broader tech trade and on certain stocks that continue to get bought up by these big tech investors, even though their actual stocks aren't getting a bid in the public market. So we'll discuss that. We have some Trump updates with Iran and this time Oman, based on some things that Trump said this morning. So we'll talk about that. Oil price is basically flat right here in the pre-market. The 10-year also flat. So at least you're not seeing a dramatic, 10 years actually up 4.712. And I think that's because of some of the comments Trump said, even though oil just ticked up as well. So there you go. Those Trump comments, they weren't necessarily the most bullish. You know, when I checked 20 minutes ago, commodities and bond yields weren't affected, but now they're affected. So there you go. Oil's up a little bit. We will talk about that. We had a variety of different names get some disclosures over the weekend. SpaceX, I think, is one of the winners of this 13F season in terms of the number of funds that have added to it, but also in terms of the fact that a lot of funds had their XAI convert into SpaceX, including NVIDIA, which now is a $17 billion stake in the company. So it didn't mean they necessarily bought fresh shares in the open market, but it also doesn't mean they sold. And so, you know, as long as those funds continue to hold, obviously that would be bullish. And so we will talk about that and get deeper into what's going on there. I hope everyone had a good weekend. I enjoyed the weekend, spent some time with family. My mom realized I can clean my apartment. Let's just say she was thoroughly impressed with the apartment. Also, I ordered a lot of Indian food for everybody. She thought I was going to order like a pizza. I was like, no, I'm not going to order a pizza when these people came all the way from India. Like, I'm going to order some authentic Indian food. So, you know, that impressed. She really thought I was going to order like Domino's for all this. Like, no, like I was going to order something good. So didn't cook, but we had some good food. Memory, by the way, up in the pre-market, which is very nice. Let me know what people did over the weekend. Hopefully it was a time to enjoy and relax. There wasn't that much crazy market moving headlines. The 13Fs we'll obviously talk about and some of the stuff that happened last night, but you did have the Anthropic and disclosures from Dario for the first time in like 10 months. He tweeted, because he kind of had to, given Gavin Baker, who has a substantial position in Anthropic, said something about Dario on the All In podcast that we will talk about, which probably required a response. It's just his response was not necessarily taken, I think, in the best way from a lot of people in the tech community. So we'll talk about that. And then you had Greg Brockman from OpenAI, president. He was live on CNBC just a couple minutes ago. We'll take a listen to him. But these companies are absolutely getting ready to go public. And so it makes sense that their CEOs are being more public, because if they're going to go public and they're going to talk to the media, they're going to talk to shareholders, then, you know, they probably can't just stay private themselves. You know, Dario barely talks to the media, doesn't tweet any of that stuff. So, you know, if he wants to be a public CEO, he's likely gonna have to do more of that. And I think we'll be expecting a ton more of that over the coming weeks. I know Dougie had a nice little fun time with Art, Matt, Michelle, Ray. That was fun. Some mods got to hang out in Houston. Did not get the invite, but I'm happy they enjoyed, and I'm happy they had a good time. Hopefully my first time in Houston will be for that Robinhood Summit, and I'll be able to see everybody there. But I still don't know when the Robinhood Summit is. I think it's mid-September. So around that time, or I think it's like end of September. That'll be my first time visiting Houston, and it should be a good time. Robinhood right there down about 0.15% in the pre-market. Zeta is down about 1%. NVIDIA is up a little bit. Broader equities are relatively flat to up a little bit. The semi-trade is going well. We got some updates over the weekend. We'll talk about that. Micron getting a nice little move. It was at $1,000, which was really nice to see. You're seeing your SanDisk back up 4% after having a 20% week last week. It was at $17.50 in the pre-market. So if this memory trade can continue, if oil can come down, if we can get through Jackson Hole with the Fed, and more broadly, we're halfway through August, more than halfway through August, and we haven't had the August sell-off that we usually have. Now, maybe it's going to happen in the next 2 weeks. We're going to see what happens. But if it doesn't, who knows? Maybe it sets up September to be well. Maybe it sets October to be well. We get through the midterms, and maybe the worst of the sell-off was in July, and then the worst of the sell-off was in March during the Iran conflict. But the VIX being at lows definitely makes you think, and fear and greed being close to extreme greed, that we're probably going to have some more volatility than expected. It's just we haven't seen it in the month of August, and hopefully we continue to not see it in the month of August. So there we go. Thank you, everybody, for being here. Let's get into it. We got a lot to get into. Yes, Reddit did get into the S&P 500 last week. That's also helped it. 177 right there in the pre-market. Did break over 180, but I think if they can continue the earnings growth and that S&P momentum, hopefully gets into 200 by the end of the year. Yeah, shout out to Tanner. He had his meetup as well. Unfortunately, I couldn't make it. Obviously, I had family coming over. That's probably why I couldn't make it to Houston, even if I did go there. And the meetup looked great. Looked like an awesome location. Some of you guys I recognize from the meetup because I've seen you at my meetups. And super awesome, dude. Super awesome. Viral. Shout out to Viral. There he is right there. There's Tanner, Mr. Sleepy Man. This is great. The cool thing about the meetups is everyone knows the inside jokes. So people get props. I've had plenty of props given to me, and you just have to sit there and deal with it. But it's all fun, and there's everybody together. So shout out to Tanner, and the first of many meetups, I would imagine, in Toronto and across the entire world. Super, super cool seeing that from. All right, so yeah, let's get into it. I think we'll start off with the 13Fs. I think that's the big thing that we got to get into because these are all the disclosures that came out over the weekend. I'm sure a lot of people don't fully know every little minute detail of it, and so we'll get through that, and then we'll talk about some of the stuff that was interesting to me and some of the stocks that I think are kind of interesting based on these disclosures. He's at least 5'10". That's what I said. He said he was 5'11". I said, no, bro, it's 5'9" to 5'10". So I'm happy you agree that extra inch, you can't give it to him. Now, I'm 5'7". Some of you guys will say 5'6", but I hope you agree to 5'6". You definitely won't say 5'8" unless it's winter. That's why meetups in the winter, boots, that's why it's more fun to do in the winter. But yeah, Tanner's definitely a couple inches taller than me. There he is in the chat. Much love, brother. Thank you. Tanner, it looked great. It looked great. Again, I wish I could have gone, just had family from India, but the next meetup, I absolutely will be there. And it should be a good time to see him there. All right, so the top 10 names that were bought in Q2. This is official now across really the investors that matter, right? Stanley Druckenmiller, Howard Marks, Berkshire, the people that we track. Obviously, there's thousands of institutions that we can't aggregate on a quarterly basis. But for the institutions that matter, for the fund managers that have opinions about the market, Bill Ackman, et cetera, these are the top 10 names: Microsoft, Meta, Visa, Amazon, Berkshire Hathaway, S&P Global, Google, Disney, Capital One, and TMO, which is Thermo Fisher. So this was interesting because obviously, as you can see, from the top 10, 4 of them were Max 7s: Amazon, Meta, Microsoft, and Google. So once again, it's not like you see Micron or SanDisk or Marvell or even NVIDIA. Now, NVIDIA everyone owns, but like you're not seeing the picks and shovels plays, although they popped up, and we'll talk about which funds bought them. You're seeing Visa, Berkshire Hathaway, S&P Global, Capital One, Microsoft, like basic companies that probably got way too cheap in Q2 because everyone thought agentic commerce was going to kill Visa, or that Microsoft was dead because cloud growth went down 1% worse than expected. And a lot of these names have rebounded so far, so these names have been good buys in Q2 based on when they were bought. Which really, if any time they were bought, they were probably, they're up now. But it goes to show that the blue chip companies and Max 7 names continue to be preferred by large investors over the semiconductors. Uber got some really big buys. We'll talk more about Uber. Ackman added to his position by 14%. Tepper added to his position by 21%. Terry Smith bought 8 million shares. So we'll go deeper into Uber, did some analysis. Also, I talked to a former AppLovin employee, and he's been out of the company for a while, but he was there in the very early days, and I got some very valuable perspectives on AppLovin, so we'll talk about that in a little bit as well. But Uber and AppLovin did some analysis on the weekend, and we'll go deeper into it. Google was the most heavily sold Max 7. The reason it showed up in the top 10 is because Berkshire increased their stake by 45%. So in terms of concentration, Berkshire added heavily, which is why Google was one of the top stocks that was bought. But 26 larger funds reduced their position or completely got rid of their position pretty aggressively. Bill Ackman sold all of it. And, it makes sense. They, at least for the ones that bought it at like 90 to 100 bucks, it gets to 400, 420, 390. Like the alpha is not as aggressive anymore compared to some of the names like Microsoft that was up 40% in the month if you bought in the lows. I mean, if Bill Ackman really sold Google around 300 or 380, 400 and bought Microsoft at 350, 370, it was a good trade given how much he was up on it. Now, the future will determine how much of a good trade it is if Google just continues to compound, which could happen. But as of now, it seems like people definitely took their profits on the Googs, outside of Berkshire, which continues to buy heavily, which maybe is a signal for why taking profits is a bad idea right here. SpaceX had a lot of heavy buyers, but a lot of these funds looked like they had existing AI positions, XAI positions. You had the Saudis that have 2% of their entire fund in SpaceX, $25 billion. I don't know if they had an XAI position that turned into SpaceX or they straight up bought. I think they straight up bought, whereas NVIDIA and AMD have multi-billion-dollar positions, but they obviously invested via XAI. So we haven't seen a lot of selling of SpaceX from the institutional side. I mean, you barely saw any of it, especially because it IPO'd a couple weeks before the quarter ended, so you had a lot of funds buy in. They could have sold, 10 days later when SpaceX basically doubled, but if they didn't, then you're going to see SpaceX probably pop up a lot more on these. I think AMD has a $3.3 billion stake in NVIDIA, which invested $10 billion in XAI, has a $17 billion stake. Micron and SanDisk. Okay, so they're not super present across disclosures. Tepper sold 40% of his position. Tepper is a hell of an investor. If he got the top or he got anywhere near the top, and then he bought it back at 700, which we're not going to know for the next 45 days. Pretty goated stuff if he actually was able to time that trade. And then Brad Gerstner added 209,000 shares. Again, maybe he sold it as soon as he bought it. He could have bought it at 400 and sold it at 1,000. So we don't fully know, but the memory names didn't pop up that aggressively in terms of the institutional flows. TSM, Amazon, and NVIDIA also continue to be strong large caps that got a ton of bids. Now, Peter Thiel's macro fund disclosed their positions, $418 million portfolio. These are the 7 positions you see on the screen: Amazon, VIST, VST, AEP, DTE, FE, CMS, and XC. 72% of the names right here are energy. And Vistra is the one that keeps popping up across a variety of different funds that I looked at. It looks like they are thinking energy is going to be the next bottleneck. And Vistra has popped up on a variety of different funds, but for Peter Thiel to go 72% energy, again, they're a macro fund. They try to kind of ride the trend. It seems like they're not using memory or photonics as like the core bottleneck, but rather more sustainable businesses that have growth rates that can be predicted and growth rates that are going to get a jolt of excitement in a world of AI that needs a lot more energy. And that's what you have from Peter Thiel. So I think there's a variety of names that are getting a lot more momentum. And this 13F disclosure definitely gave me a lot of opportunities to kind of look at some names that are a bit more interesting. And we will talk about them throughout the show. Real quick, let's just talk Uber, and then we'll get into some of the other headlines. Did some basic math on Uber. Look, it's cheap, guys. Trades at $76, fell to 65 after earnings weren't that strong in terms of the sentiment. I think fair value is closer to 120. If you put a very basic 17, 19, or 22 free cash flow multiple on 13 billion of 2027 free cash flow, stock gets to minimum of $108 a share. It's at 76 right now, and it's a blue chip stock that just had a massive expansion with Delivery Hero and doesn't look like it's necessarily slowing down on free cash flow. Consensus free cash flow is 11 billion in 2026, 13 billion in 2027. It should not be trading at 12 times free cash flow for growing 18% going into next year. Like, it just seems weird that it's trading at this level, but then it's not weird because the obvious reason for the discount is Waymo, Tesla kind of disintermediating the necessity for Uber. And I did some, basic research over the weekend. It's not anything special, but at the end of the day, the argument for Uber is that they become a distribution layer to all the AVs that are out there, and you need their network, you need their 200 million monthly active users, you need their network effects, you need the product they've built. I think people might be overpricing the ability to just make an app and have people download it and then have this massive network, especially when the idea of a robotaxi taking over billions of miles driven across the country, forget even internationally, which is already a different problem, but at least in the United States, it's just not happening anytime soon. We're not seeing it, So like, even if you don't like Uber as an investment, as a trade over the next couple of years, if FSD and Waymo don't take over the world, which I find it hard to believe that they will. And even if they do, you're going to have Uber as that layer to help make things happen. Obviously, they lost the Waymo partnership in July, which also got people upset. I think the stock probably gets higher than 76. Having said that, Micron is going to outperform Uber by the end of the year if, we're in a bull market. It's just that simple. So Uber is not a stock you buy right here to expect it's going to go to 100 by the end of the year. Could that happen? Yeah, I think if sentiment changes. But Micron's a stock that you buy for the real volatility if you want to see it get up to 1,200. Uber is not that. Uber, honestly, I think it's a candidate to sell puts on and sell some calls. If you look at it from March of 2024 to now, it's been stuck in a 6% range. So it's one of those things where, like, if you've been selling puts on it, you've been crushing it by just collecting the premium. And if you do have to own it at 50, 60 bucks, unless the business is going bankrupt, you should be pretty happy about owning a high quality company like this. You had a lot of the big guys add in the quarter as well. And then if you're selling covered calls on it, if it just never gets called away, you're making some good premium. So Uber is actually kind of interesting right here outside of the whole Tesla stuff. But if that Tesla robotaxi fear lasts for the next 5 years, maybe the stock is stuck for the next 5 years. And obviously there's going to be other names that outperform. SanDisk right there, that's up 3%. Then Micron, that's up 2.8% as well. What is Uber's moat? I would say the network they've created is a meaningful moat, given it hasn't been disrupted in any fundamental way. I mean, when I'm looking at the numbers, I'm like, okay, like, and I'm open to that moat being challenged, obviously, in the world of AI. I think that's fair. That's why the stock has been discounted. But if you're not completely getting rid of all their cash flows because of autonomous vehicles, which again, there's no evidence in the numbers that that's happening. And how many years are we going to wait to see if that happens before the street is like, hey, this is cheap. It needs multiple. I think that moat is comparable right now to some of the other companies that are out there. But at the end of the day, I think it's getting big guys to get into it. Also, Pelosi has a bunch of calls on this thing. It's 3% of her portfolio. I mean, you just have too many important people that are loading up on the name because it's too cheap. And then you might be saying, well, why is it contrarian? Well, it's contrarian because everyone thinks it's going to die because of Tesla. And it's like that in and of itself, believing that's not going to happen is your contrarian perspective, which is what you kind of need to have alpha. And it feels like that might be the perspective here that needs to happen on Uber. Rocket Lab, that's up a little bit in the pre-market. Your Palantirs, your Rocket Labs, your Hoods, your Tesla, they did not pop up over the 13Fs. They usually never do, but really it was the Googles, the Microsofts, the Amazons. Those were the names. Bloom Energy did not pop up. CoreWeave popped up a little bit in Brad Gerstner. He added more CoreWeave shares, but outside of some of the more tech-focused investors, you didn't even see a ton of SaaS, to be honest. You saw some ServiceNow, some Adobes. You really saw tech. You saw Visa, MasterCard, and tech, and those were the sort of core names that got a lot of the buys in Q. Software is probably down in the pre-market because the semi names are getting a little bit of rally. That algo that takes them longer short. It's not as aggressive as it was in June, but it's still there. I mean, we saw evidence of it over the past couple of days. And I think we might be seeing a little bit of that right now, but ultimately I think by the end of the year, that's not going to be the biggest thing in the world that people care about. The other thing on memory, thanks for this, Rob, is that there's plenty of reporting over the weekend that Lutnick basically told Apple no on buying Chinese memory. That's, I also think, part of the reason for why the memory names are up right now. The U.S. urged Apple not to buy Chinese memory chips, even though Apple doesn't even want to buy for their U.S. products. They want to buy for their Chinese products. And still, the U.S. government is not happy about it. Commerce Secretary Howard Lutnick, which Tim Cook was with last week, touring one of their factories in Texas, urges the iPhone maker to find other solutions to AI-driven chip supply crunch. I think this right here is your core headline for why the future slipped green on the semis, why some of the software names are down because the semis are up. But it makes sense. I mean, look, in this America first economy that Trump and Lutnick have been talking about for a while, AMD, by the way, hit 520 last night. Right now it's at 512 in the pre-market. You're not going to have them easily say, yes, buy Chinese memory or buy Chinese anything. So from that perspective, if that was a bear case for memory, which even if they bought some Chinese memories, that wouldn't necessarily flood the market with chips, which would decrease the price of power. That solution on how to deal with memory prices going up, probably not going to happen. You just need more supply. Until you get more supply, these names continue to have the pricing power that they're showcasing right now. Anthropic, let's talk about that. Gavin Baker made some headlines. Here's the quote that he said over the weekend around Anthropic, and here's what caused a bit of controversy after hearing this.
First, internally, Anthropic is very confident. I have been told by multiple people I trust that Dario has said that Anthropic might be the only private company in the world at some point. Think about that. In this vision, an Anthropic maximalist vision, there's Anthropic, and then there are governments. And that's it. So there's a lot of confidence. I'm sure they have more advanced checkpoints than Fable up their sleeve. They've executed really, really well. I would probably take the under on them being the only private company in the world. I think it's going to be a long time before they land a rocket or they're
they deliver your lunch. I don't know. There might be other businesses in the world. Zipline might want to bring you a burrito. Uber might want to take you somewhere. Waymo might want to drive you home. But sure, Dario.
I might interpret that as a negative signal because it's so hubristic,
Yeah.
This is getting into SBF land a little bit.
Yes.
I would certainly discourage Dario from saying that ever again to anyone.
So it's kind of crazy, right? Because you got Dario telling people privately, I think in the most extreme version of what the company could turn into, which would obviously be a very large company, but there would be no need for other companies to exist besides us and governments. And just the nature of saying something like that. By the way, Jensen just tweeted about OpenAI. We will talk about that in a second. It looks like he is confirming the Ohio data center expansion. Okay, so those rumors were true, as they are going to be working with OpenAI. So we'll look at that in a second. But yeah, it's one of those things where it's like, it's just weird, bro. One company with private governments, like when you say stuff like that, again, this is why the Wall Street Journal article about his wife, trying to get investments from Jeffrey Epstein, this stuff starts to come out into the public if you want to get investors that are in the public markets, right? Like people are going to want to know who the heck are we actually giving our money to? And it's a little weird. And then on top of that, Dario finally responds on X, and he didn't really deny it. Like he just puts out all this slop about what he thinks. Like no one's reading all this shit, first of all. And then he says, I do not agree that my messaging has been disproportionately negative around AI. He's not explicitly saying, yeah, I didn't say that. Like there is no part in which he says, I did not say what Gavin Baker is saying I said, because Gavin Baker is pretty freaking tapped in to Anthropic. I mean, if anyone were to know, and by the way, Gavin Baker would not say on the world's most listened to podcast, Gavin Baker would not go and say something that he knows is factually incorrect. First of all, it would hurt his credibility. Second of all, he has a large stake in Anthropic. He doesn't want, there to be such negative perception around the company that it hurts the valuation of it. So it's showing how objective he is in his critique, but it also shows how much like he's tapped into knowing that people feel Dario believes in this broader supremacy that Anthropic can entail. Now, obviously, there's more nuance to what Anthropic thinks and how they feel about the world and regulation and all this stuff. But the point is, at the end of the day, if you want people to buy the stock and you want people to believe in it, there also has to be some messaging that's just basic to understand. And sometimes, when you get these soliloquies by Dario, it's not really easy to understand what this guy believes. He's like, oh, well, I wrote this essay. It's like, bro, that's a 15-page essay. No one's reading that. Like the average investor does not have the time to read that shit. So it's one of those things where it's like, what really does he believe about AI? And, as people who are participating in this AI revolution, given he stole all the information off the internet, him and OpenAI, like they use the entire world's content to build their models. And then they have this kind of approach of like, we know better than you. Like, it's just one of those things that, it doesn't really feel right. Now, the numbers are amazing, and that's a whole different question. But I think this is going to be an issue for the Darios and the Sam Altmans of the world when they go public to communicate to investors. Having said that, even in the midst of feeling a little bit weird about what they're saying, you still have all three guests, all three hosts on the Olin podcast believing that they're going to do more than 500 billion of ARR by the end of next year.
$1 trillion.
Okay,
How
I'm going to
about
put
this?
500 billion over or under Gavin Baker.
How about this? I'm going to take the over.
500 billion.
No, I'm going to take the over. Whatever the Wall Street consensus is for 27, which I don't know, I'll take a 25 to 30% over on that, assuming that this regulation campaign doesn't
you're basically
succeed.
going out on a limb here saying that the underwriters are going to sandbag revenue. Okay, congratulations,
Material
Gavin.
Yes.
Give me my answer.
No.
Over 500 or under?
I think
What is
4
your
to
bet
5. I think 4 to
Okay, so you're
500
under.
billion
You're under
is
500.
within the zone
Okay.
of like realistic and achievable. Can I just say
Sachs.
one other thing?
Hold on,
Just
Sachs.
one other
Over
thing, bull
under
case
500 billion, Sachs.
I actually was going to say 4 to 500 billion as exit ARR for next year.
Okay.
Seems very comfortable.
So right under. Okay, great. 2 unders.
I mean, they still believe that Anthropic's going to get to, right now, Anthropic's on a run rate of 74 billion, maybe 100 billion by the end of the year. And then that 700 billion could turn into or 70 billion could turn into that 400 or 500 billion, which would not be a 10x of revenue. If it was, they might end up doing, close to $1 trillion of revenue, but they're going to get to about half that, which would be pretty incredible. So in the face of Dario's weird public commentary, and, there was this other Anthropic employee that was like, Dario never said that, but Dario himself never tweeted that he never said that. It's weird when someone very close to the company says something like this, and then the CEO comes out and doesn't say, this is unequivocally false, I never said that. And you need another employee from the company to be like, Dario never said that. It's like, well, why doesn't the CEO come out and say he never said that? It's like, it's one of those things that's just, it's weird, it's confusing. But then you have the growth on Anthropic that is just so massive, and we think it's going to continue to accelerate. So it's like, well, you kind of have to, if you want to participate in this AI revolution, they're spending all the CapEx, they're having all the RPO, they're still putting out the numbers that are impressive. So when it comes to buying the IPO, I'm still undecided on if I will. I obviously want to see the S1. But if the numbers are the numbers are as strong as they are, I think it's going to be hard to get people to not buy the IPO, especially given the numbers are going to be better than SpaceX from a valuation perspective, right? And so if SpaceX was able to raise $85 billion, I think Anthropic should easily be able to raise that. The question is then, will it go up and then just fall flat? Or will at least have some momentum going into the end of the year. But it does look like that IPO is happening. And if it does happen soon, which is in like a couple months, the market's going to have to adapt to that level of liquidity. And, it begs the question, is that going to be the top of the market, or do we have enough money to support it? And I think there's enough money to support it in the system, but the macro obviously has to be in the right space, because by June, the macro was in a horrible space towards the end of the month, and Elon IPO'd right before that, which ended up marking the top. And, the reason for why the macro was bad, oil kept going up, and leverage continued to be in the system. So if we don't have those dynamics in September, October, right before the midterms, maybe that IPO is successful. Jensen just tweeted OpenAI. So the report over the weekend was that NVIDIA was going to invest $3 billion into SB Energy to help support the OpenAI Ohio data center. It looks like that is correct. The activation timeline will happen from 2028 to 2030. NVIDIA's remaining exposure will be a backstop. OpenAI will make lease payments and the facility's capacity comes online. If OpenAI does not use the site, NVIDIA says the capacity can be resold to qualified tenants across its cloud, enterprise AI lab, and startup ecosystem. NVIDIA covers defined portions of the lease and power payments plus a specified residual value commitment, not all site costs or tenant obligations. I think part of the reason for why Jensen is doing this $500 billion co-investment loan system with all these 6 different banks is because he doesn't want to do this, right? Putting $3 billion into SB Energy and then covering some of the payments for OpenAI. Like, I think he wants Goldman Sachs and KKR and Apollo and Brookfield to handle all of this stuff. And instead of NVIDIA having to, have their balance sheet face the liability of it, which they've done successfully over the past couple of years to get a lot of these neoclouds started, to get the next 10x of neoclouds and 10x of data centers on capacity, you're going to need a lot more financing. And that's probably going to come from the different institutions that, their job is to loan out money and find a way to make a return on that money. So I think from that perspective, it's bullish for OpenAI. It's bullish for more money coming into the system, but obviously I don't think NVIDIA wants to take all the responsibility for that, which is why they had that participation that they had last week. Okay, AppLovin, let's talk about it. A lot of you guys seem to be curious about AppLovin right here in the chat. First of all, put it in the chat if you're buying AppLovin, because obviously this name is getting a lot of attention, down from $800 all the way to $318. I had a call with, and then we'll talk about Greg Brockman, because he just went live on CNBC. I had a call with a former AppLovin employee. This guy was there like when the company was a startup, when it was worth like, I think less than a couple $2 billion. So obviously the stock has made a massive, massive move since then. And he's been able to do very well from the stock-based comp that he got back then. I'm going to sum it up very simply, what he told me. His argument is that the street is upset that Anthropic, or not Anthropic, that AppLovin is seeing declining growth rates every quarter. So I think this growth rate was like 53%. Like last year it was like 67. And the year before that, it was like 78, right? So the street is upset that it's going down from 70 to 60 to 50. And the CEO, which also did an interview this weekend with Molly on the Source Report, I would recommend people watch that as well, is kind of guiding for it to be stuck at 30%, which is amazing for a company of their size to be able to compound 30% over the next 10 years. But the fact that it's going down and down and down is kind of, making the street wonder like, hey, when does this declining growth rate actually stop? Now, you might be thinking, okay, well, a company going from 70% growth to 55% growth is not that big of a deal, because obviously it's not expected. Like Palantir is not going to grow 90% every year for the next 10 years. If they do, it's going to be a multi-trillion-dollar company. But, even if they don't, they'll probably get to that multi-trillion-dollar valuation. It's just going to take more time, because the growth will slow down inevitably, because that's what happens when you become a bigger company. So why is that such a big deal? Well, the problem is AppLovin effectively has a monopoly. They have around 70-80% market share on mobile gaming. For those that don't know what they do, they are the back-end infrastructure to show advertisements in mobile games. So Angry Birds, League of Legends, Clash of Clans, whatever you play on your phone, random chess games, like whatever games that are out there, which is like about 1.3 billion people a day play video games on their phone. All that stuff is powered via advertising. That's how it stays free, because most people don't pay for that stuff. And that comes from AppLovin. So not the most exciting TAM when you think, okay, League of Legends for computer, I don't know. The point is, it's just games on your phone, whether it's League of Legends or whatever it is. It's that's how you guys know I'm not a gamer, League of Legends. But whatever is on your phone, AppLovin is basically the infrastructure that puts ads on it. Facebook tried to disrupt them. They couldn't do it. Google tried. Amazon tried. All these big tech companies that are making hundreds of billions of dollars a year on advertising, they have not been able to penetrate AppLovin's moat when it comes to this, which is why AppLovin is going to do, around $9 billion of revenue next year, trading at a $100 billion market cap, growing at 55%, trades at 10 times sales. 15 times earnings. It's obviously cheap, which is why people are excited about it. The problem is they need to expand to a different TAM. And what I was told by the employee is that morale at the company sucks right now because they've been trying to tap into e-commerce as a TAM, and that has not been going that well. And the street is starting to recognize that. So the issue with AppLovin, very simply put, is that they are effectively a monopoly on mobile gaming ads, but everyone's realizing, the stock went from $9 to 800 from 2022 to now, right? And it went down from 140 to 9 back in 2022. So obviously it had massive returns that TAM was penetrated into. And now, people are wondering how big can mobile gaming really be? So they need to expand their TAM. And the management and the company has been unable to really show the expansion of growth outside of mobile gaming over the past 2 years, even though they've been saying on every earnings call, hey, this is what we're going to do. Even though this earnings call wasn't the best, they were kind of dodging the question because they're probably the execution is not going that well right now. So it is a cheap stock. Its growth rates don't warrant it trading at this level, but it's almost like if the market doubted your TAM for the foreseeable future, the only reason you're paying a growth multiple on a company that's excessive is because you believe they will grow into that, and you deserve to discount their cash flows in a way that appreciates that growth in the future. Right now, the street's doubting that, and they're doubting that pretty heavily. It's not about Reddit advertising or Facebook advertising. It's not about the ad sector. It's about AppLovin's particular TAM not being big enough going into the next few years, which, by the way, even if they don't get into e-commerce, they're still probably going to compound 30% over the next few years. But then the question is, what am I really paying for if this 30% growth is inevitably going to be 25 and then 10 and 15? And it's not going to be that type of story that people want to invest in for the long term. So I think it's a candidate to sell puts on. I mean, realistically, if you can get it under 200 in that 250 range, I think it's a steal. The question is, what's the catalyst that gets it there? AppLovin is down 50% year to date. I don't have a position in this. I'm obviously still doing DD on it, but I don't know if it goes down, another 20, 30% after being down 50%, unless in the holiday season, which is Q3, or going into Q4, they're going to fail to show that they're expanding their TAM. And if they do, then obviously the stock is going under in a much more aggressive way. Now, if it does, if this thing falls to 280, 270, it would still be so discounted that you're probably going to get some type of bounce, which is why the buying there or the selling puts there is not a horrible range to get it at. So that's one perspective on playing the name. The other perspective is just staying out of it and seeing, if this can rebound back to the 400s, have the chart repair so you don't have to go bottom fishing, but at least you're not catching a falling knife. Right now, it absolutely is a falling knife. Absolutely. Because nothing has changed about the narrative that the street is upset about. And software has recovered meaningfully from the lows. AppLovin is one of 5 stocks in software that has not recovered at all this year. So it is the definition of a falling knife, but you have to really believe that things can't get that much worse, or that their TAM will continue to expand in a meaningful way, and that even if their TAM doesn't expand, the growth rates are so depressed, or the multiple is so depressed, given the growth rates are still accelerating, not quarter over quarter, but at least on a linear basis, that it feels like it is a steal here, even if there are some qualitative questions about where their TAM is going. So that's my thoughts on AppLovin. I think there's more DD to do, but it really shouldn't be trading here unless you think the entire future growth of the business is not going to happen. But is it the most obvious opportunity in the market? I don't know. Again, I think Micron's probably getting back up to 1,200 before AppLovin makes a run back up into the 550s. But if AppLovin does bottom, if sentiment does bottom, and there's any level of meaningful engagement around where the earnings are going, I think it's going to shoot up 20% because it's down 50% for the year. So it's very asymmetric here. It's either a falling knife or it's completely bottomed, and time will tell to see what happens. But right now, that stock up a little bit in the pre-market. How is mobile gaming a TAM? It's so interesting because that was my question on the phone. I was like, dude, people pay billions of dollars in advertising to mobile games, and he's like, yeah, they just did $2 billion of revenue last quarter, or 1.95 billion. It's crazy. Mobile game advertising is that big. Well, there's a couple billion people using it every day and playing it across Android, iPhone, etc. So I guess that TAM has just been heavily underserved by Facebook, Amazon, etc. I don't really play games on my phone, but I'm sure. Also, the largest demographic of people that play games on their phone? 40-year-old women. And 40-year-old women have purchasing power. So the ads actually are really effective because these women see an ad and they're more likely to convert. And so it's incredible. These are things I did not know about the industry, but because these are so important, this is how AppLovin has defined their mode. 2 other things that he said. Number 1, he said there is no trade desk issue when it comes to AppLovin. TTD was really dominated by Amazon that ended up taking their lunch, and he does not see any of the big competitors trying to do this for AppLovin. They've already tried and they failed at it. So it's less likely for this to become a TTD situation. And then number two, he said every short report has been full of shit. He said the SEC even allowed AppLovin to voluntarily engage in an investigation because they had to do it as a formality due to the shorts calling them out. But each short report has not been, rooted in anything substantial. So I think there's less of those types of risks. It's more a question of growth rates, and that'll be the determining factor on if people want to buy AppLovin or not. Greg Brockman, president of OpenAI, he was just live. Let's see what he had to say.
May be underappreciated.
First of all, thank you for having me, Andrew. And yes, we are in a window right now where we can see a little bit into the future. I talked to a number of organizations, going to conferences, talking about cybersecurity, and everyone feels that we are in a moment where cybersecurity fundamentally needs to change. Every organization needs to up-level its cybersecurity practices, but many people don't know where to start. And I think that no one is really talking about this message publicly. Everyone kind of feels it, talks about it in closed rooms, but it is important that we as a country and as a world really take the moment seriously. So the OpenAI Hugging Face incident, it was one moment we got to see into the future. You could see how automated attacks are going to become possible, that these will be capabilities that will be in the hands of threat actors in upcoming months, because this technology is being created across the world by many organizations. But defenders have a moment now where they can change their practices, where they can up-level everything that they're doing. And I think that fundamentally what's going on is that we're learning that human written code is full of vulnerabilities, that there is tech debt that's building up over time, and that we can actually, the same tools that are going to be potentially used to find those vulnerabilities and exploit them, they can actually find them first and fix them. That's why defenders have an upper hand, have an advantage, but need to lean in. So we are talking about the practices that we're using at OpenAI. We are very urgently moving to up-level everything we do, but also lessons that apply to the general industry and tools that can help make everyone more secure. So we believe in the long run that defenders can really win here.
Well, so that's the question. Can defenders really win if, in fact, and the Hugging Face story was, fascinated a lot of people, scared a lot of people, because it fundamentally showed that at base, underneath these models, if their guardrails are not on, that they will go find, cheat, lie, do whatever is necessary to break the code, if you will.
I would say that there are two pieces to Hugging Face. The first one is really something about how we develop and evaluate these models. And that's something we've taken extremely seriously. And so we're also talking today in a later blog post about the different defenses that we have introduced, the way that we've up-leveled safety, security, alignment in our development process. And that is absolutely critical, that you want models that are really aligned even when they're contained and even when you're developing them, that's a real shift, that now the models are capable enough that it is important for us to be applying all these techniques that we've been preparing and really thinking about for the past decade since we started OpenAI, that we're bringing it all together as part of one unified engineering process.
Now, again, the cybersecurity names have gone kind of crazy this year because of this Mythos effect, and why Claude and a lot of these advanced models are being taken more seriously. The broader question here is, what does the cybersecurity moment for OpenAI mean for its business to go public? You had a couple of disclosures on Friday that I think were really interesting for OpenAI. The CFO said in a closed meeting with investors that the enterprise part of the business is growing faster than the consumer part of the business. It's starting to get a lot more excitement and momentum. And she said that the year started at 60-40 consumer enterprise, but enterprise is accelerating much faster than expected. And the majority of revenue is now enterprise with a $40 billion run rate. And also that the people leaving the company, all these C-suites leaving, she said, was part of their personal decisions, didn't reflect on their perspective on the company. Maybe it did, maybe it didn't. But the broader point is that the actual growth of the business is strong. And that's probably because of a lot of the cybersecurity stuff that we've seen as well. So I think both Anthropic and OpenAI are starting to have a much more sophisticated understanding and approach of how to go public, how to prove their revenues are sustainable, how to prove that they're going to win as a public company, and they're not going to be subject to the whims of the market if one little bad thing happens and the entire story collapses. Because if you have a sustainable business with real revenue and a path to profitability, yeah, your stock could be volatile, but your stock's not going to go out of business, and your company's not going to go out of business over one thing happening when it comes to AI. And again, Jensen backing OpenAI this morning with SB Energy for the Ohio data center. So, I mean, honestly, it looked kind of bleak for both these companies to go public a couple months ago. Now it looks like the path is opening up and that there's a much more easier path for it to happen. it's just going to be a question of if the street allows them and if the liquidity is actually there. By the way, Gavin Baker does not have a stake in Anthropic. I just looked that up right now. Explicitly said he does not have a stake in Anthropic. So the quote is that he's close to various people in the Anthropic company, and he obviously has proxies to Anthropic. I mean, part of the reason he owns Zoom, I think, was to play Anthropic. Almost every semiconductor name, to an extent, is a proxy to Anthropic and OpenAI, but he does not have a stake in the company. So that actually makes it even more credible to me for why he was calling out Dario on saying that stuff, because he obviously wants Anthropic to win. He thinks they should be going public at a $3 trillion valuation. He said the upper bound limit of their potential right now is closing in on that $7-10 trillion market cap, but he does not have a stake. So the level of objectivity he can have on Dario, is something that we need in the industry. He does have a big stake in SpaceX, which is, why SpaceX continues to be a top holding of his. AAOI, that's up in the pre-market, up about 1.2%. Cerebras was another name that got bought over the weekend. Brad Gerstner bought a ton of it. Obviously, he's been in since the IPO as well, but it picked up a couple other funds. Cerebras is interesting. I haven't done enough DD on them right now. I hate the valuation on this thing, but we need a lot of fast inference, and Cerebras is one of the names that's supplying it. It's just, the past two earnings they've had have not been something that the street has liked, just particularly on guidance and the OPEX that increased from 90 to 500 million. Broadcom, which took a drop last weekend on the fears of cybersecurity. They got hacked in one of their data centers, and then a sell side downgraded them. That's why that stock fell from like 420 to 390. We'll see if that can get a rebound. Oracle right here, that's down 1%, as that was down 3% as well on Friday. We got 1 minute until we open. Couple other quick headlines. Intel CEO bought stock. Constellation Energy CEO, director bought stock. Keel CEO bought. Pfizer CEO bought. And Nokia insiders are buying. Gavin Baker also put in a position on Nokia. So you got some insider buys coming across the board. Intel CEO bought like 1 million shares, I believe. So you do have I think it was 100,000 shares. I'll get the exact number on it. But I think his total now is around 1 million shares, and they've obviously been buying a lot more. And it's interesting to see because that July drop was pretty aggressive. So you're seeing more and more of these people buying. He bought 12 million worth of shares, the Intel CEO, at $95 last week. So we're just seeing more and more people in the insider part of the market say, hey, instead of selling, a lot of them have taken profits, but many of them are taking advantage of all the pain that has happened in July. And, we'll see if that ends up helping going into Q4. All right, folks, thank you all for being here. It is Monday, August 17th. Got a bunch more headlines to get into. Let's see how this price action starts out for Monday. And we will see if we can end out August in the right way. 9:30 a.m., the stock market is now open. All right, wake your ass up. Let's get into it. S&P 500, which hit all-time highs on Friday, and we were relatively green. We were at 779. Let's see if we can get above that 780 this week, because I think that would be the most important. S&P is now up 6% over the past few weeks from the absolute lows, which is incredible. And, we're basically here at all-time highs. Uber, that's up 2%. Reddit, that's down 0.5%. Micron, back above 1,000 for the first time in a long time. I don't think we hit 1,000 on Friday. So it's nice to see Micron getting some of that love right there. SanDisk, wow, 1720 on the open, up 5%. If the semis are going to have this big of a run, at least the memory names, you can expect a little bit of weakness in software, which is kind of what we're already seeing. Shopify right there down about 1.2%. Palantir goes green, 175. Nebius, that's actually flat. Nebius was at 285 in the pre-market, 274 right there is what you're seeing on Nebius. Still holding the 270s again. I mean, shorting Nebius has just not been the strategy. This thing has absolutely exploded. 140 to 270, 180 to 270 in the past week. Just a massive, massive move. Rocket Lab, 8122. That continues to go green. SpaceX, 140, which has bounced all the way from the low 100s back up into the 180s. IREN, that's up 2%. TSM, that's up 0.5%. SK Hynix, almost back to the same price it was the day it went public, around 175, 173. This fell to 129 a couple of weeks ago. So you're seeing your DRAMs of the world start to get a lot of that momentum up to $60 right here as a holder of all these memory names. AppLovin, that's up 1.5. Uber, that's up 0.5. Reddit's actually down 2 after the S&P inclusive announcement that came last week. And you're seeing a little bit more downside action on more of the software names. Whereas IGV, are we red? IGV officially goes red. Where is Microsoft? That's red, 491. Google, again, it was the most heavily sold Mag 7 by number of funds, if not by the percentage allocation. Google's flat right there, but the fact that it's holding, that 340, 350 range just means there's plenty of buyers that have stepped in. Berkshire being one of the biggest, adding to their stake by 45%. Amazon 262. Amazon, if we lose 260, I mean, it'll officially be, it'll be higher than where it was before earnings, but it will not have been a monster earnings move like we saw from 230 to 280. It would have given up a decent chunk of that back. And if that happens, then it happens. But it's kind of the story that's been happening with Amazon for the past couple of years. Like any jolt of excitement just gets kind of rejected after the next couple of weeks. And it gives you another chance to buy more Amazon, but it has not really held a ton of these gains. Robin at 95.98 as that tries to flip up. SMCI, which had a great Friday. SMCI 38.82. That's down about 2.5%. Credo's up 7%. You're seeing some of your photonics names get some more love. AAOI, which held 150 yesterday or on Friday, now at 151. We'll see if that can hold it. It was at 156 in the pre-market. Lumentum also had a great week last week, almost at 1,000. Coherent didn't have the best week, but I think it's trying to rebound. 338. It did fall about 9% on earnings. Where is CoreWeave? 103. Okay, so that goes down. Interesting. The NeoClouds outside of Iren are actually down on the day. Dude, the Nebius covered call premiums are unbelievable. I mean, at the monies are paying $40 a month out, which is just crazy because, I mean, if you bought Nebius at like 220 and you're happy selling it at 270 plus 40, 310 effectively with the premium a month out, and you get $40 of downside protection if it actually drops 40, which it could because of how volatile it is. Those premiums are incredible, but they're also because of, the volatility that's in this name. And it doesn't look like that volatility is slowing down anytime soon. Amazon goes red. Google goes red. Microsoft goes red. Did Meta also go red? Marvell's up 5%. Meta goes red. Okay, Mag 7 doesn't want to participate on this Monday morning. Being a bit moody right here. AMD 512. This went all the way to 506, then got a bounce. As that's green. Is Meta going to zero? Meta acts like it's going to zero every day. I don't think it will, but it does act like that. Netflix, the only big buyer of Netflix was Bill Ackman. None of the other funds really took a shot on it. A lot of them bought Uber, but they did not buy Netflix. So, and again, Uber, look, as undervalued as I think it is, if the narrative doesn't change around Robotaxi, it's going to be dead money like it's been all year. And I think many names will outperform it. So I think you have to have a lot of patience if you buy a name like Uber, but you can also, sleep well at night without the volatility. By the way, Steve and I interviewed an ex-quant who worked on Wall Street, and that podcast will come out tomorrow. It was very interesting. One of the things he said that we'll talk about in a second, but it gave me a lot of context. And when he said it, it made so much sense about how these hedge funds actually get assets under management. Because you see these hedge funds barely beat the S&P, and you're wondering who the hell is giving them billions of dollars to invest. And there's a reason for why they're getting that money, even though they're barely beating the S&P, many times not beating the S&P. And we'll talk about why. I thought it was just fascinating how he described it. Micron right there, that's up 4%. Micron's holding on. Zeta's flat. SanDisk up 5.5%. SanDisk having a great day. Broadcom also getting a little bit of rebound. NVIDIA was at 227. Now it's at 225. So that comes down a bit as it's getting some weakness with the NeoClouds as well. Rocket Lab's up 3%. You're seeing that go a bit green. It's weird. You're seeing a lot of the semis divert from each other. Oracle's flat. Marvell's up. The memory names and some of your picks and shovels optics names are actually green. Is Corning up? GLW. That is green. I don't know why Meta's down 2. But I think it's probably down with all the Mag 7s, to be honest. Oh, there was actually a headline on Meta yesterday. The headline was Meta is facing astronomical consequences as legal fight reaches critical moment in California. Less than 2 weeks after a loss in New Mexico, Meta faces a much bigger legal test in a case being co-led by California's AG. You could wake up with a headline judgment that is, as I've said, very astronomical. The New Mexico AG told CNBC, fresh off a victory against Meta in his state. I mean, look, if Meta ends up becoming the scapegoat for a variety of states that are basically just saying their platform is toxic and essentially selling drugs to kids in the form of dopamine via social media, then yeah, that's gonna, I mean, Google had to deal with the antitrust stuff last year before that finally went away. It was a year of Google being stuck in antitrust before finally, the antitrust fears went away. Google paid their settlements and they were able to move on. Meta, even with the settlements that they pay, they're racking up to the billions of dollars at this point. Like, it could be a drag on not only free cash flow, but net income expectations. And obviously perception is not really what the street is happy about when it comes to these lawsuits. Bloom Energy, 234. This was at 245 in the pre-market. Zeta, she is trying for 30. I think she got to like 29.80 last week and then got, 29.87. So this one I think is very close. We just got to see if we get there. Nebius opens down 4 officially. CoreWeave down 4. So your neoclouds get dumped into the open to start off the week. APLD also down 1.4. Keel, is that red? That is actually up 4%. So Keel going the opposite. IREN also was going the opposite. IREN is now flat. It was up 4. Now it's flat. Gerstner did buy more CoreWeave. Also, we had situational awarenesses. 13F, but none of it's real because he sold everything. But it goes to show you how levered he was, dude. This guy had many, many billions of dollars in Bloom and Nebius and SanDisk and Micron and all these companies. And, obviously the leverage just became too much. Amazon starts to fall off a little bit more. Gerstner bought how many of CoreWeave? He bought the exact number. He also bought Qualcomm. He bought 1.8 million shares of Qualcomm. That was a new position for him. He bought 1.5 million shares of CoreWeave. He sold 600,000 shares of Uber. He sold 73,000 shares of ARM. He sold 600,000 shares of Meta. He added 1.8 million of Qualcomm, 1.7 million of SpaceX, 209,000 of Micron, 261,000 of AMAT, 570,000 of KLAC, 394,000 of Lam Research, 140,000 of Synopsys. He actually added 175,000 shares of Google. That was a new position. Synopsys was a new position. Lam Research was new. AMAT was new. Micron was new. SpaceX was new. Qualcomm was new. And KLAC was new. Hood, there was no change. They still have $90 million worth of Hood. And then Broadcom, they sold 67,000 shares. And Axon, they sold 148,000 shares. Robinhood, 96.65. Cerebras flipping there. Wow, that's a big move on Cerebras. There were some 13Fs that loaded up heavily on this, but not like the biggest names in the world to make everyone run and go buy it. So that's actually a complete reversal from they were down 17% on earnings. That is a full flip right there as it's recovering to where it was on earnings a while ago. Schwab is down. My orders are in processing. Put in the chat if Schwab is down for people. I don't use Schwab, so I wouldn't know, but Hood seems to be working fine. ServiceNow down about 1.72%. Wow, a bunch of you guys saying Schwab is down. That's weird. That's either a technical thing or there's too many people trying to trade on Monday morning. And it's not like we had news over the weekend that would cause that many people to run to their brokerage. So that feels more like a Schwab issue than a market participant issue of too much momentum. Corning, that stock up a little bit. Wow. That's not a good look. But then again, it happens to every brokerage. It happened with Robinhood 3 weeks ago. It happened with Fidelity like 2 months ago, I remember. But it kind of just happens. I wonder why, though. Because the day it happened with Robinhood, there was like, I don't know what the news was, but like things were up like 3% the premier. Like everything was going crazy. So I can understand there's probably just a lot of people trying to buy and sell, which created too much strain on their servers. The volume still in August has been flat. I mean, S&P 2 million shares, which is decent, but S&P averages 50 million shares. It's been doing like 10 million, 15 million. Friday was at 8 million. Like there's just not a lot of volume that was coming into the names. Palantir just flipped red. 173.43. SpaceX, yeah, it was red pre-market, now 3% pump right here. SpaceX, I think, again, with NVIDIA having a $17 billion stake and AMD, you're just seeing a lot more people that own the name. And I think the broader argument here is even with the 90% of liquidity that's going to be dumped on this stock, which, one day that could happen, you could wake up and it's down 10% just because there's a lot of selling. There's also a lot of expected ARR growth. But it's the NeoCloud business that's going to guide this multiple to make sense at $2 trillion. Without that NeoCloud business really expanding. Elon tweeted over the weekend that token demand is going crazy. Grok bot is starting to get a lot of momentum as well. And you're seeing, Grok's not out of the race. I know everyone thinks Anthropic and OpenAI is one, but if Grok actually comes out with a frontier model that's better than the other ones, it's very quick for an enterprise to just switch. And if they do, and you have real innovation around agentic inference that Grok is coming up with, maybe that gets the street to be a lot more excited. These are the top performing stocks for the S&P 500, by the way, on the year. You still have SanDisk, Dell, Seagate, Micron, Intel, Western Dig, Marvell, Lumentum, HPE, and AMD. So these are the names that have gotten all the attention. 10 years at 4.7, which is not the best to see. And it's going to take a lot of work for these other names to dethrone those going into the end of the year. Why is Rocket Lab running? Well, SpaceX is running. So that tends to get Rocket Lab to run. 84.56, that's up 5.3% as well. Rocket Lab has gotten stopped in its tracks basically at this price every day last week. I think it maybe got to 86 once. Yeah, it got to 86.82 last week for like a millisecond. So if we could actually break 85 and hold above it. But again, SpaceX probably needs to, stay in this range because SpaceX also got rejected basically at this level last week. That's where you would see maybe Rocket Lab getting ready to break out into the 90s. Nebius back to 270. Again, the volatility in this is massive. CoreWeave down 1.6%. Robin at 96.61. Inflection, that's up 3.7. ASTS is up 2.9. Lunar is up 2.5 as well. Whoa, someone just bought 2.6 million of SpaceX calls, 270 strike, but they are doing it in January 2028. So you do have some time for those to play out, but you are seeing the call buyers starting to step in. Wow, Schwab is still bad for you guys. I think it's going to take probably 15 minutes. Usually this stuff takes a minute. The good thing about Robinhood when it happened a few weeks ago is it was resolved in the pre-market. So as soon as the market opened, there wasn't an issue. But usually if there is an issue, it takes 10, 15 minutes at least to get resolved. So it might take a second. I ran right there, 44.58 as that continues. That continues to kind of be flat right here. OpenAI says we are continuing to invest in secure architecture and controls. We are putting more models to work to defend our critical infrastructure. Morgan Stanley, they maintained their 335 price target for Amazon. They outlined a 500 bull case for the company. Amazon right there, 262, still down on the day, but getting upgrades. Marvell actually got downgraded to 300 from 340 by UBS. So they still have a buy on it, but it's down. Bank of America says Micron still is our top pick. We think they're going to do $250 of EPS in fiscal year 2030. The analyst cited SanDisk's growth outlook as evidence that memory demand and profitability could remain durable. Why is Cerebras moving on no news? I think it might be the 13F disclosures that are causing this pump. I don't feel that confident in that, though, because it's not like Buffett or Ackman bought Cerebras. It's like some of the tech funds, like Chase Coleman from Tiger Global. I mean, he's obviously going to take more tech-focused bets, and so he bought Cerebras, which is fine. But I don't know if that's enough of a signal to the market to, buy because of the big guys. So I feel like there's a different headline, but I don't see that headline. Gavin Baker obviously has Cerebras as well, as that's made a move. What price do you like ServiceNow? Not at these prices. I mean, a lot of the software names I don't like because they've already run, right? Like, I don't know if software is the buy anymore. I think for the long term, software could be the buy. But Palantir went from 107 to 170, ServiceNow 80 to 120, Shopify 100 to 150, Reddit 120 to 170. Like, I feel like chasing software right here could do well, but it's also like, we had 3 months to buy software, more than 3 months. Honestly, we had 5 months because this whole stuff started back in February. So the only software name that's like reasonably priced right now that hasn't made a run and that has growth to justify being excited about it is AppLovin. I guess you could say Microsoft in there because it's down below 500, but Microsoft's more of an AI name. So the other ones have run. I mean, dude, Snowflake went from 150 to 350. Like, some of these names have just gone crazy. Datadog, Atlassian, Adobe 190 to 270. Now it's at 250 right here. So I just don't think you're getting a ton of bang for your buck buying the software names here, although, obviously the business models are proven to be more sustainable. Rubrik was a big winner of the software space. I mean, I think software would have to go down 10, 15% for them to get really, really attractive again. Just because, their multiples have now started to at least more reasonably expand from where they were a couple months ago. I ran 44.38. That continues to go a bit more green. Reddit's down 5. This one continues to be volatile. Even Reddit here, I'm not interested in Reddit unless we get back to 150 and reasonably below 150. And maybe it gets there if the street is upset about whatever, but this thing's also just made a massive run, down 5%. There's probably a headline affecting it, but S&P 500 was the headline last week. Cybersecurity names also, dude, as important as they are, it's hard to buy Palo Alto or CrowdStrike or what's the other one? Fortinet. Like, they've just all massively outperformed the other SaaS names. And now that's a show me story because none of them have the growth to justify these multiples. None of them. Like, they really better start getting above 30, 40% growth. And I don't know if they can even really meaningfully get above 25% growth, given everyone's saying cybersecurity is important, but like, does it actually translate into the growth rates? And if it doesn't, I think those stocks take a really big dump because, like, what is the street paying for at that point? So I think now they have to, if IBM fell 50% because they said more customers are spending on cybersecurity, CrowdStrike better show that those customers are actually spending on cybersecurity because the street's already given it the multiple. S&P 500, 775.60. It says flat. Is IGV a sell? No, I don't think software is a sell here because I don't think Shopify is going back to 95. But I'm not buying Shopify at 150. Like, it is more than priced in the growth rates of the future. And now it's more so a question of a slow grind higher to hopefully the 175s, but I don't even expect that anytime soon. Now it's like you sit back and let the names compound. If you're actively trading, yeah, I think you take some profits on software. I mean, they've run, they made their run. And the semis look a lot more cheap now, given they've still been under. But same thing, I'm not buying Nebius at like 280, right? Like these Nebius gave a good month of time to buy the dip. Cerebras, I still don't have news, but 14%. There's something here that the street likes, that they're excited for. Hive did announce a data center deal this morning. That stock's up 8%. This one has also kind of underperformed a lot of the neoclouds. They signed a 5-year AI cloud deal worth $350 million, adding about $70 million in annualized revenue. That's why that stock is up 8%. Cerebras still continues to make a move. AppLovin, are we still red? We are still red. There you go, 326 to 314. Again, it is 1,000% a falling knife. And it's really just like cybersecurity. They've got to show the street the expectation on growth can meaningfully change. This quarter, they didn't do it. That's why it was such a negative reaction after this Q. And if they don't do it in Q3, I mean, the stock's going to have some issues. So having said that, it's down 50% for the year. You ask yourself, how low can it go, right? So that's the kind of push and pull here. And it just comes down to, are you bullish on their actual business? And that, I think, requires a lot more due diligence to be able to easily say it's a buy versus a trade. AppLovin, that's still down. Bloom back to 240. Could Cerebras be running due to Jensen's X post? Well, Jensen posted about the OpenAI SB Energy investment. I don't think that could be the reason. Let me see if there's something else here that we're missing. SpaceX still green. A-Lab also having a great day. Western Digital. No, there's nothing. It has to be the 13F disclosures. There's always a few stocks every cycle that get a bid every 45 days because the big guys bought them. Gavin Baker, Brad Gerstner might be the reason for Cerebras. Now, I think they both own them privately. So a lot of those shares are not, shares they bought on the open market. I think they did support the IPO by buying some stock, but they've had that position for a while. So I'm not sure that's the only reason. Wow, SanDisk, almost 8%. 8% on the day. Amcor continue its momentum as well. That is up 4.3% as that continues to also go green. Rocket Lab 85. I do not own any of the quantum names. I do think, though, just buying quantum on the potential that it becomes the next big thing is not crazy. I think there's a lot more institutional support for it. Microsoft, Google, IBM, they're all working on their stuff. So I don't know. The quantum names you don't buy because of valuation or growth. You buy them because if it does become very important, a lot of those companies, D-Wave, Rigetti, IONQ, they're going to start to have more meaningful impact on the world, and the market will reflect that. But those names have been relatively flat this year. Cerebras 253, that's up 15. Micron, that is up 4. How are the quantum names doing this year? Let's see. Again, they were massive winners in 24-25. Year to date, D-Wave's down about 25%. IONQ, I think, is doing the best out of these guys. It's basically flat. It's down 1%. Rigetti is down 20. And then Inflection is down 14. They IPO'd this year, I believe. Micron 1000, as that's green. JPM upgraded SanDisk to 2300. Yeah, we talked about Jeffries resuming coverage last week. It was hilarious, dude. SanDisk goes up 7%. All these guys are like, yeah, actually, we think it's a great stock. It's really hard to trust the sell side on these semi names because they don't want to look stupid if the semi's top and it's a real cyclical boom bust. But they also, want all the momentum if it goes up, because then they can tell their clients, hey, we told you to buy it at 1500. Now it's at 1700. And so it's one of those things where they're obviously chasing price as well. NVIDIA trying to get back to 227. Broadcom trying to get up to 394. How is Hood not getting bid? I was thinking about this over the weekend. Honestly, I think the prediction markets are creating so much revenue for Robinhood that the fear of anything, Kalshi's being sued by like 40 states. The fear of anything happening to the prediction market and the ruling by the CFTC, I think, is what is keeping Hood down. Like, that's the only thing I can really think of at this moment for why the stock's taking a hit. Maybe you could take some crypto sentiment, sure, but I think it's that their cash cow, their newest cow. Prediction markets are doing more revenue for them than equities now. Think about that. Robinhood has been selling equities for 15 years, and prediction markets that came up less than a year ago are doing more revenue than equities. I mean, it's unbelievable. But it makes sense. There's a lot of growth in that sector. They make more on the fees. And so if that's threatened politically, you could have some problems. So I think maybe that could be the thing that's holding down. Palantir back green, 174. A couple of you guys saying Schwab's working. A couple of you guys saying Schwab is not working. So that one's still trying to get back online. AAOI, that's up 1.3%. That was only because of the World Cup. Yeah, but now we're getting into baseball. We're already in baseball season. NFL is coming up soon. NBA, I mean, at least for Q3, Q4, they're still going to have tons of growth in prediction markets, even if it's not World Cup type of growth. I think it's more so about if certain parties win and just want to outlaw how the CFT has defined gambling and all this stuff and futures contracts on prediction markets. Oh, by the way, the CBOE said there's going to be 20 stocks. It was supposed to happen on Monday, but then they delayed it. I don't know when they're going to officially make it live, but there's 20 stocks that are going to have options start trading at 7:15 versus 9:30, which is kind of crazy. Hood was on the list. I think it was Hood, Broadcom, Amazon. There was a bunch of these big names that are super liquid that are going to have options start trading 2 hours before the market opens, which I think is pretty massive because, let's say Robinhood's up, and you want to close a covered call or something, or it's down and you want to close a covered call, 2 hours before the market opens. If you could do that and capture premium or sell your call options because it's up big in the pre-market and you want to, sell it before the market opens because you think it's going to dump, having that choice is something people have been waiting for a long time versus having to wait until 9:30. My opinion is that this is going to only lead to more tokenized asset classes. I think the CBOE, the CME, they're realizing that if you can trade a perpetuals futures contract 24/7 using blockchains, and that's where the world is going to, you don't freaking need, to wait till 9:30 to access your leverage. A lot of these traditional financial understandings that the NASDAQ, the NYSE, the CBOE, the CME have imposed on markets, they're getting broken. And I think in 10 years, it's going to be absurd to think you have to wait till 9:30 to close an options contract, or that you even needed to buy 100 shares of a stock to be able to sell a covered call. How come you can't fractionalize this? I think so much of this is going to get tokenized, and theoretically Hood should be a big winner there, but so should Coinbase and all these other companies that are innovating in that space. Amcor back above 60. As that is up 4% as well. Yeah, Schwab's still messing with a bunch of you guys right here. As it's not fully working. Again, the names that are down today are really Mag 7. Your semis are pretty much up. And honestly, that's probably why your Mag 7s are down. The only Mag 7 that's up is NVIDIA. The rest of them are all red. Apple's been red ever since growth started coming back into favor with momentum. Microsoft's a little weird, falling 2% right here, given this thing was at 515 last week. But I guess it's going down with the other Mag 7s. Google's down, and then Amazon. Microsoft was one of the biggest stocks that was bought in Q2 as well. So you had a lot of people probably load this up under 400, retail and institutional, which makes sense for these names to be holding on. Druckenmiller did not buy a ton of stuff that was super interesting, to be honest. Let me pull up his 13F. I think it was more selling than buying, but it wasn't anything like crazy. Berkshire bought more Google. They also bought more Macy's. They bought the DHI home builder. David Tepper has Amazon, Micron, TSM, Google, and Uber as his top 5 positions. His top 5 buys were Apple puts, Boeing, Amazon, TSM, and American Airlines. His top sales were Baba, Pinduoduo, so he's getting out of China, SanDisk, Micron, and then Corning. And then Druckenmiller, I mean, he bought Google and Amazon, which is not that surprising. He exited completely Micron, Broadcom, and Mercado Libre. He also bought some Tesla calls, Google calls, Meta calls. These are his top 5 positions. TSM is up there. RSP, equal weighted S&P calls are up there. And Roku, Broadcom were some of the top sells as well. So nothing too crazy by Drux, but a lot of these guys did sell some of their memory that obviously, went up like crazy, which is why they took some prods. Yes, he also had a small position in PURR, which is a hyperliquid treasury company. This is kind of like BM&R for Hyperliquid. If you don't know what Hyperliquid is, then it's not that important. If you do know what Hyperliquid is and you're bullish on that ecosystem in crypto, then this is a way to get exposure to it. But it's just the treasury that holds Hyperliquid. It's not a massive position for Druckenmiller, but he did buy it. So, he is probably looking at what's going on in crypto and trying to find different types of exposure to some of the new blockchains that are developing and new systems that are allowing those exchanges to get more liquidity. Micron right there at 1,020, and Hyperliquid's obviously been a big winner this whole year in terms of how people actually trade more tokenized assets. Is Nike going to zero? That is a good question. Nike below 40 right here. I don't know, but I still don't get how anyone can defend Nike trading at 23 times earnings when Meta is trading below. Like Meta is trading below Nike. It's not like Nike, like ELF is actually cheap when you look at the multiple. Nike's not growing. It's like, what, 2% growth? Like, why would you pay 22 times for that? And it was at 30 times at 45. I still don't get the excitement around Nike, other than sentiment is so bad that it's bottomed, which could be a reason to buy the stock. But the numbers aren't like even kind of compelling. Uber right there, basically flat on the day. Applied Digital slowed down 1.4. And then CoreWeave continuing to go down. I feel like in the neoclouds, Iran's probably next. They've got earnings coming up. I mean, if Iran can't pump on this earnings, it's going to be surprising because CoreWeave and Nebi is completely, 20, 30, 40% moves on those two names. Nebi's was 30%, ended up being 40%. After a couple days on the earnings, CoreWeave at around 25%. Like if Iran can't move, something's wrong with how they've reported earnings. I don't even think they need a massive deal. I think they just need to show execution. Even if they don't have some big hyperscaler deal on the street, should re-rate them, because all the things that people are excited about CoreWeave and Nebius on in terms of gigawatt capacity, land acquisition, etc., I think Iran should basically be able to show that. SanDisk up 9% right here. Micron was also up 5%. And so, yeah, revenue's still going to suck. That's not going to be fun. But, I mean, a lot of these companies are not even judged on revenue. They're judged on ARR, right? So I would imagine they could get at least some more excitement here. Okay. What else do we have? Let's see what we have this week in terms of macro. Canada's inflation came out. It's at 3%, up from 2.8. So Canadian inflation a bit higher than expected. We talked about retail sales last week, which were lower than expected. New home sales were also basically flat last week. We don't have CPI and PPI this week. We got through that. We have some housing starts this week. When is Jackson Hole? This is where August 27th. Okay, so it's on the day of NVIDIA earnings. This is when Kevin Warsh will be speaking at an economic policy symposium. And basically, he's going to hint. He's probably not going to, but people will try to read between the leaves on if he's going to actually hike in September, which the probabilities have gone down. based on some of the data we got last week, but obviously the risk of it. Dude, if they hike in September, if they really do it as a way of just saying, hey, we need to do something about inflation because it's not going down fast enough, I don't know if the war is going to be over by then. I mean, it could kind of mess up the end of the year. I don't think one hike ruins everything, but it definitely can stop this amazing momentum that we've had across the board in software and semis, even with good earnings. So it's one of those things where we're really going to have to see, do they actually get more than 50% of the people on that Fed committee to make that decision? Oracle, are we green? We are red with the rest of the neoclouds on Oracle. Amit, are you still thinking of Figma? I was. Problem is their stock-based comp is kind of annoying. And I don't say that's the only reason not to do it, but dude, I don't know if design is the biggest TAM when I'm thinking of a SaaS company that I want to be excited about. It's not about Anthropic killing them or anything. It's more so about, Canva is interesting to me because Canva has 240 million monthly active users. Like, I pay $12 a month for Canva. Like, I can see that growing. Figma is obviously a staple in the enterprise, and that will continue to grow. But just like AppLovin, like, how big is that TAM, and how long? So it's growing 50% right now, but eventually it's not going to grow 50%. And if Figma declines like 30%, is the stock even up enough for it to go down, or is it just going to fall from these levels? So I think there's a bit more work that has to be done on it. Having said that, I don't think it's massively expensive. I just think the stock-based comp is an issue. Profitability is not fully there yet. And then design as a TAM is not that interesting compared to like the TAM of a Palantir, the TAM of a ServiceNow, the TAM of these companies going after enterprise intelligence, which is, just a lot bigger. Even Zeta's TAM, as they're opening up new levels of enterprise intelligence, seems to be a bit more excited. Canva's valuation did get marked down recently. That is correct. Yeah, I think they got a little greedy last year with their secondaries, and they're realizing the public markets don't love software companies, which, technically that realization happened in February, and they re-rated all the software names. But yeah, they were going to go public at 40. I think they're now probably going to go public at around 25, which theoretically could happen. Marvell, are we still green? That's up 7% on the day. Marvell and Cerebras. Marvell was not a big winner on the 13F season. Not sure why these two are running like crazy. Mike, and thank you for the gift of 20. Appreciate you, man. Thank you for that. I think you gave like 20 memberships last Friday as well. So deeply, deeply appreciate you. 20 of you guys just got memberships due to Mr. Miken as well. Thank you for that, sir. Marvell 236. Do you know anything about CCXI? Yes, that's the humanoid robotics company. I am not feeling super bullish on humanoid robots right now, like at all. And the reason for that is because if you watch the new podcast with Brett, I think on My First Million, he once again hinted that it's going to take time. And he's leading one of the most valuable private humanoid robotics companies. And then, Chris Camillo, who I trust a lot, he thinks it's going to take time. Elon says it's going to take time. All the Chinese bots that are out there are full of shit. Like, they can't really do much. And, they're not expanding internationally to the United States. No American company is going to have Chinese bots in their warehouses. Like, I just think it's going to take more time than people think. It's not going to have like that ChatGPT 2022 moment where it just goes vertical. Or if that does happen, it's not happening for the next couple of years. Definitely not in people's homes. You're not going to have a robot do your dishes anytime soon. So I'm not bullish on it right now. I don't, the thesis isn't there at the moment. I mean, the thesis is there. It's just like the timeliness of it. So then when Agility is going public, I'm like, okay, why is this company going public? And to me, it's just like, because they couldn't raise money in the private markets. That's it. And they know that retail wants exposure to a pure play. So that's why they're going public, which is what CCXI is. But I don't think if Tesla doesn't have the numbers to justify it, how the hell is some private company that probably does not have an AI model that's meaningful enough to actually, survive in a home or an enterprise going public? Like, I don't get it. Ondas down 3%. Archer also down 3%. Yeah, that's what the dishwasher is for. That's also true. But yeah, I've never been a fan of robots in the home anyway. My whole bull case on robots is replacing workers inside of warehouses. There's hundreds of millions of those jobs globally. That's where your real bull case is
for robot expansion. It's not in the home, even though, a lot of people want it to be in the home. And I just think every time these companies like X1 or Neon, they put out a video, it's all just hype. Like none of it's actually real. Like none of it's like, oh, I can buy this, I can go into my house today and start doing useful stuff. So I think the industry has some years before it actually takes off aggressively. Nokia up 2%, Rubrik down about 2.5 as well. Someone just bought VIX 24 strike calls, 11 million of it going into September 16th. VIX is at 1498. It's obviously trading at a yearly low right here. 24 from 14 would mean the S&P is going down probably 5% if it actually got to 24. Maybe not 5%, maybe like 3%. Granted, volatility is cheap right now, right? Because the VIX is relatively low. So you don't want those people to have jobs. It's not about wanting those people to have jobs. It's just about the inevitability of robots, right? If a company can pay for a robot for $30,000 and it's 10 times more productive than a human, it's not about those people having jobs. It's just what's going to happen in the industry. Like there's a reason Uber beat the taxis. It was cheaper, it was more affordable, and the technology was faster. So it's going to happen. And that's a problem for governments to manage, right? I don't know if the solution is that we ban robots from existing, which I don't even think is possible, to protect those jobs. Like usually that's not how it works out. And maybe we have to tax the robot companies more to pay a universal basic income to like, there's all these different political solutions that are going to have to inevitably emerge. And I don't really know how it's going to happen, but it's going to have to happen. But the idea that robot progress is going to stop is because the Chinese are going to invent robots as well. And the Chinese have a lot of manufacturing jobs. I mean, that's kind of one of the bedrocks of their economy. When China it's about being globally competitive. And there's no way we're going to be globally competitive if other countries have just way better robots than us that are working way faster than us. I mean, their GDP growth is going to expand and they're going to have more influence on the world. And that's why technology still matters in the United States. Adobe right there, down 3%. Ironically, correct. It should make things so much cheaper if you have a robot in a warehouse because they're doing 5x more work per day than a human could do, that the cost of goods should go down. This is kind of Elon's thesis. Now, his conclusion is money becomes worthless. I don't think that's the case. But the idea of giving money through a UBI to someone and not having to give them like, I don't know, $100,000 a year, but because everything's so cheap now, because the cost of goods have come down, you can give someone $50,000 a year and they could still have a decent living because everything's so cheap. Like there's all these different questions that are out there. Don't know how they're going to be resolved. I don't think they're going to be resolved for many, many decades. But it is inevitable. Like it's hard to imagine that, this is what we're seeing. And that is why was Upwork down freaking 20%? Because a lot of people don't need to pay designers anymore because they go to Gemini and say, make me a thumbnail. I mean, graphic design was one of the biggest verticals of Upwork and Fiverr. And like, just, you don't need a graphic designer anymore if you're doing something on an amateur basis because Google, ChatGPT, they all do it for you. In fact, over the weekend, I tweeted this picture of Druckenmiller, David Tepper, and Bill Ackman. All I did was I went to ChatGPT, I gave them the 3 pictures and I said, hey, can you make a collage of these 3 pictures? I didn't even have to go to Canva and like crop the pictures in. And it's a pretty good photo. Like they're all equal. You have the slanted lines in the middle. I mean, like that was done in like 5 seconds. And then I tweeted the picture. I mean, it's another example of how this stuff is getting more and more efficient. And it just seems like that's probably going to be the future. SpaceX 150 resistance. That's a good question. We are close. Let me check that. Cerebra's still moving. Should have switched their hairs. That would have been funnier. 150 is 503,000 shares. 503,000 shares. That is going to be a little aggressive, but maybe it's possible. Maybe it is possible. What's your take on Perplexity? I feel like Perplexity is kind of not as relevant anymore, but they still did 500 million in ARR. I think it was the number. They're worth 20 billion. I don't use them. People obviously still do use them. Perplexity Computer is a great product. It's just, once again, trying to compete with ChatGPT and Anthropic's a bit tough. I think Anthropic will eventually, or Perplexity will eventually get bought out. I don't know if they're going to be public. Apple was in rumors to buy them last year. Question is, do you pay 40 billion for Perplexity? It's worth 20 billion right now. Like, what is the correct price you pay? And do they get to a couple billion in ARR anytime soon, and what products are going to get them there to make it happen? Especially when, I mean, to pay for their real pro products, it costs a bit of money. Whereas the other guys, even the free versions are just so cheap. AMAT right there, that's up 4% after being down a while ago on earnings last week. Robinhood getting a little bit of a move. Robinhood 96.73. Trying to get up there. But again, even the robots replacing humans in a factory, which I think would be the use case. I think that's why these companies are really working. I mean, Elon's said that, right? Brett said that. I don't think that's happening for a while, because even the robots right now, like compared to a human, they're not better than a human yet. They're not doing stuff that's faster and more productive than a human. If they were, you would see a lot more companies using humanoid robots. I mean, they're using robots in general, right? There's Amazon is filled with automated robotics, but Amazon still needs 2 million people in the warehouses, because to get a package from A to B, you need a lot of people. I don't think we're anywhere near robots replacing that. So it's like, how do you bet on a robotics company right now? How do you even buy Tesla on the Optimus thesis when they haven't even set up the factories to build Optimus yet, much less the AI models that are going to prove Optimus is actually effective? So I think that is the problem with the thesis right there. Yeah, I still don't see the Cerebras news, guys. I don't get. So someone's got to be buying it here. Some fund loading up 18% on this thing. Maybe it's a delayed earnings reaction, but earnings, were pretty ugly on a bunch of different metrics. So I'm not sure what that delayed reaction would entail. Palantir 176. SanDisk still moving. What's the short float on Cerebras? That's a good question. Let me check. Maybe Leopold's getting back in. Maybe. The problem is he's not using leverage anymore, so he has a limited amount of capital to work with at this point. Wow, 17%. Okay, so maybe a little bit of a squeeze going on there. SanDisk's short float is 5%. Same with Micron. So the memory names aren't shorted as heavily. Micron's at 3%. Aren't you in Figure? Yes, I am, and I'm still saying I think the robots are far away. I mean, again, Brett did a podcast over the weekend, CEO Figure, and I was listening to him very carefully, and he's implying it's going to take some time. It's not there yet, and he's basically saying exactly what Elon said on the earnings call. So, as bullish as I am on robots, I just don't think it's going to happen for a few years. I definitely don't think 2027 is going to be the inflection point. Maybe 2028. Realistically, I think 2029, if you see enough innovation. Kathy Wood has bought Cerebras. That's true. She's been buying it for the past few months now. Ethereum and Bitcoin, once again, sentiment continues to not be the best on these two asset classes. I think Kevin Warsh is going to have to be pretty bullish at Jackson Hole to get the market to assume we're not going to have a rate hike. And if so, maybe crypto runs, but it has been a full year now with crypto just being flat, and I think it's going to take some time before the market once again gets excited about crypto. I think it will happen. It's just a question of when. Cerebra's still up right here. There was a clip of Trump talking about Oman this morning, or some stuff he said about Oman. Yeah, let me pull this up. Trump basically said the U.S. would bomb Oman if they try to interfere with what's going on with Iran.
Danny, at this point, this is considered a major escalation in terms of the president's threats. The context here is that we did hear from Iranian state media earlier today reporting that Iran remains in, quote, intensive discussions with Oman when it comes to the Strait of Hormuz. Over the weekend, we got confirmation that the two countries have established what's being called a shipping map for traffic to move through the waterway. Though no agreement has been finalized, the U.S. is not a party to these talks, and Iran has made very clear that any such agreement does not equate to a full reopening of the strait, as the prospects for a reopening of the strait continue to dwindle at this point. We are seeing an uptick when it comes to commercial shippers using that so-called shuttling tactic, where ships are trafficking through the strait with their transponders off and waiting to then transfer their cargo to ships that are waiting on the other side. But I bring this up because, Danny, new satellite imagery that has been analyzed by Bloomberg News appears to show the first such transfer of LNG, which is different than oil because there's different considerations that these shippers have to take into account here when it comes to the temperature of the cargo. So this would be a pretty significant move if these shippers are starting to use the shuttling tactic for LNG, and just goes to show really the desperation at this point to get cargo out.
To that point,
I think that's why oil and the 10-year are spiking today, unfortunately. And then Trump with that threat about bombing Oman, which I don't think he wants to do. But look, stock market's at all-time highs, but so is this thing, at least for the year. And it's something we can't have. And then you had Trump have this comment yesterday on Truth Social. Based on my very good relationship with Kim Jong-un of North Korea, I am not happy with the fact that the United States has long ago agreed to participate in joint military exercises with South Korea. These exercises are not only costly, with much of the cost paid for by the United States, but send a signal that is totally inappropriate and hostile to a country that, as long as Donald Trump has been president, has been unthreatening and respectful. Therefore, and based on the fact that it is too late to cancel, I have instructed Hegseth to substantially reduce the joint military exercises. While somewhat unrelated, I recently asked the president of South Korea if they would like to join us in the denuclearization of the Islamic Republic of Iran, and they said, no, thanks. Thank you for your attention to this matter. So he's basically saying South Korea is not helping us with Iran. Therefore, I don't necessarily want to engage in military exercises with South Korea. North Korea obviously doesn't like when South Korea engages in military exercises. China doesn't like it when Taiwan does that. The U.S. has always supported Taiwan and South Korea. But Trump and Kim Jong-un are technically way friendlier than any other U.S. president has been with North Korea. And so I think in one respect, Trump is trying to boil the tension down between South Korea and North Korea. He doesn't want to get North Korea involved. But at the same time, the South Koreans probably aren't the happiest about that because they want to fight for their sovereignty. So you have this whole North Korea, South Korea issue that's popping up. You have the Oman thing that's popping up. And then once again, Besant said 2 weeks ago we would get a ceasefire. We didn't get a ceasefire in 2 weeks. So it's a little annoying, but it would be nice if we could kind of, somewhat get close to that. It was like Tuesday. Besant was like, yeah, either today or tomorrow we'll get it. It's like 15 days later. Nothing. VIX up 5% right there, 1495. Still obviously very low for the year, but up about 4.9%. The 60-day treaty ends today. It does. Oh, man. All right. So, that's actually a big piece of news. If that's 60, I mean, we've been going back and forth with them regardless of the treaty, but if the treaty is officially done, wow, Reddit down 3. Palantir also getting hit. Then that means that there might be more a formal process for both sides to attack each other. AAOI, that's still up. Coherence up. Lumentum's up. As that continues to go green. GitHub is down. Might explain the Microsoft dump. I would hope Microsoft is not dumping off GitHub being slightly down. Nabius, are we still at 265? 269. Down 3%. It's not much, given the run that it's had. I mean, this thing's got to go down 10, 15% for Burry to even have a chance to break even on these shorts. But he continues to remain short. This and the Micron short's got to be killing him today as well. He added more to this on Friday. I don't know, man. I don't know if shorting memory here makes sense. This thing fell from 1250 to 700. That was the short. You have to be short June 29th and ride it down until July 29th, basically. A lot of the bad news has been priced in, whether it's TAM, earnings, cyclicality, Apple, China, CXMT. Like a lot of that news has came and gone. I don't know if it's that relevant anymore. Chris says, can you talk about the Nanalyze thing? Dude, this guy is... I knew I shouldn't have responded to this because it's only giving him more attention. But I responded to it because I was like, why not? Like, it's a stupid take, and I have a perspective on it. But obviously, this guy just wanted attention. Yeah, this dude on X, he was just like, CEO shouldn't talk to retail. And he was like, Vlad and David Steinberg and Noto talking to retail just means like they're not focused on the business. And so I was just like, what are you talking about? Like, these guys talk to the sell-side analysts all the time. I've had sell-side analysts tell me, dude, our job is to go to dinners with, when Karp talks about steak dinners, he's not lying. It's like, dude, our job is to go to dinners. These guys buy very fancy wine bottles. We sit around, we eat steak, and they basically wine and dine us so that we issue an upgrade the next morning and we feel comfortable. Like, that's literally what these guys do. They can't do a retail investors YouTube podcast to talk to the people that actually are like diamond handing these stocks. I mean, so there's a lot of, even Chris Camillo chimed in. He's like, dude, this is an outdated take. You know, the guy obviously did it for attention and it worked. But yeah, I just don't think his analysis made much sense. Now, if it's like a penny stock that is not producing any profitability or even has not showing any growth, like, SoFi is growing, Zeta's growing, Robinhood's growing, Palantir's growing. Peter Beck just did an interview with Molly. It's growing. Like, these are companies that, yes, they have some aggressive premiums associated with them. But that's also because they've executed, really, really well over the past couple of years. Them talking to retail is not bearish in any sense, in my opinion. It's different when it's a company that's not executing and it's like some random penny stock, but these are very high quality companies. Jensen's talking to YouTubers. Nadella's going on random podcasts. Like, it's kind of just the name of the game now as a public CEO. I wonder if Dario will do that. I don't know if he will, but Dario, Sam Altman, like, these guys are going to have to talk to a lot of different people to get people to be more excited. Yeah, Peter Beck did Molly's show. I don't know if the episode's out yet. She interviewed the AppLovin CEO the other day. Molly's crushing it with the interviews. She's great. She's a good friend of mine. She did an AppLovin podcast. She did Nikesh from Palo Alto. Like, just getting some pretty big names here. And so the Peter Beck one will be out soon, but it is exciting to see that type of expansion. Bitcoin 63.5, Marvell up 5.84%. Do we have any updates on the Nebius New Jersey stuff? Is there anything going on there? Maybe that's why the stock's also down a little bit on the day. That was the reason it fell from 270 to 250 last week, but then it just rebounded back up to 280. We haven't seen anything too different from there. Again, 2.6 million square foot data center in Vineland, New Jersey, 300 megawatts capacity. Right now, it's still being voted on, but it's not canceled as some people reported, which is why I think the stock took a hit. There's a meeting today. Okay, so that's actually important then. That means we'll get some updates on the progress of that data center and how it's going to play out. And we'll see what the market thinks. Here was Julian Emanuel. He was on a couple minutes ago giving his thoughts on where oil and the broader NASDAQ is going.
Seasonality is probably going to rear its unpleasant head, which, of course, as we know, almost always creates an October buying opportunity, but you got to get there first, is that this whole idea that 2018, and then you look at 2022, the last two midterms, and certainly in this unique political cycle, have been volatile events. They've been buyable, but you had to ride through the volatility.
Are you getting a lot of questions about what credit markets are seeing that equity markets might not?
So credit is very interesting this cycle because usually, and this just points to the incredibly different nature of this post-pandemic world and the AI world that we're in, is that high yield tends to be the canary in the coal mine, okay? And basically, high yield spreads are near their tights simply because it's sort of a forgotten part of the financing market. And investment grade, obviously tech, where all the demands are the areas that have widened. And from our point of view, what's tricky here, and is again, you saw the 30-year yield hit a new cycle high once again this morning, is that you have the potential for this negative feedback loop where higher yields on the long end make it more difficult for the hyperscalers to do the borrowing that we think they're going to need to do to support what we estimate to be $1.3 trillion in CapEx next year.
Or the flip side, makes it more difficult for the Treasury to do the borrowing.
We can't argue with that.
Yeah.
We cannot argue with that.
There's also a lot more issuance at the bottom rung of the investment grade market too. So potentially paying attention to those widening spreads could make sense in terms of the health of the economy in a way that maybe we haven't historically as we've looked at junk bonds, for example.
It's a completely different environment. We've never had this incredible preponderance of investment grade issuance at a time where the economy is, going pretty well, and a time where market multiples, to your point earlier, are actually no longer a worry.
Yeah.
That's one of the extreme positives of essentially the July risk-off episode.
Do you
that
want
we
to talk
had.
about that kind of extreme right tail positive potential outcome where you say, look, we could just get a stampede that gets the S&P to 9,000? How does that come about?
So we actually think that if you look at all structural tech-driven bull markets of the last 25 or 30 years, they invariably end with a stampede.
Yeah.
You saw it at the end of 2021. You certainly saw it in Y2K. And from our point of view, and we were having this conversation in Evercore's morning meeting, there really isn't any FOMO out there. There is a sense of unease. Now, investors are reasonably grossed up once again in the wake of the situational awareness unwind. But in our mind, the cycle has further to go, and you're likely to get this sort of euphoric lift as you did previously, which is also why, in our mind, with a VIX at 15, if you want to think into 2027, long-term call options on the triple Qs make a lot of sense.
So
as well.
upside exposure is also cheap when the VIX is
Correct.
Yeah,
correct.
It would
Long-term calls on the triple Q. Dude, Evercore is bulled up. I mean, he is right. When the VIX is that low, the volatility on the long side gets cheaper because everyone's expecting it to crash. Puts also become relatively cheap. I mean, there's a lot of ways to kind of hedge and position in this market right now, but I also wonder how low VIX is going to stay before you have either a geopolitical update with oil or you have the midterms come in. By the way, AOC is now ranking pretty heavily to be the next president from the Democratic side. You have Shapiro, Newsom, and AOC that are like your top three candidates right now. And so midterms, I think there's going to be a lot of campaigning from different angles. And we're going to see what the market thinks. Okay, so this Nebius meeting is at 6 p.m., which is interesting because I wonder if we get results by like 7 or 8 p.m. I don't know if I can drive to the Nebius hearing. I don't know if they would let. Imagine if I could, like, I am a shareholder. I deserve to listen to this hearing. But, you know, I don't know how these meetings go, but is there a world, do people think, where they vote to ban the data center in this hearing? Or is that completely off the table and this is more of a logistical thing? Because if it is, and that news comes out at the end of the day, that could obviously be very bad for Nebius. And that's what was rumored last week. Now, from my understanding, that's not exactly possible. Some of you guys are saying it is possible. Nate's saying it's logistics. Nate, who do I believe? You or the people that are saying it's possible? I really don't know. I have no idea. I feel like I should know more about this, but see, this is the issue with the neoclouds as well. Like, this is not something I want to worry about. Like, I just want them to expand and build. And like now with all this political stuff, like I kind of have to worry about it. Like if I don't know about the details of this, like you could get smoked because a data center gets banned. And then it's like, all right, that's not good because these businesses literally, if they're not growing data centers, they're not growing revenue, they're not growing ARR. I mean, there's no reason to invest in them, right? So this stuff kind of can't happen. Zeta 2912. That breaks above 29. Does anyone actually know if it can get canceled? Like, Nate, do you actually know if a vote could happen and they legit say, yeah, we don't want the data center anymore? Because I am not the most up to date on this New Jersey expansion for them. And that's definitely something we're going to have to look at today. Cerebras up 15%. That is still green. Average home in the United States, Zillow says the typical middle tier home in the U.S. is now $371,000 as per the month of July. So this is up pretty strongly from 2020, where I think it was either 310 or a little bit below 300 back in 2020, but 371 is your average price now. Nate says it could be delayed, but not straight up canceled. Well, a delay, I feel like would still not be good for the stock. Okay, so maybe it can't get canceled, but I feel like a delay is where people start thinking, what if it could get canceled? And then people just sell because they're afraid of it. That's something we're going to have to see. Yeah, these mortgage rates continue to inch higher. I mean, it's just tough right now. in the housing market for supply and demand to unlock. But I don't think we're getting a rate cut this year. I mean, put in the chat if you actually think we're getting a rate cut. Let's listen to Liz Young and her perspective on this. I don't think we're getting a hike, but I also do not think we're getting a cut unless oil gets down to like 60 because, Trump really ends the war. If that doesn't happen, I think we should all just be happy if we at least don't get a hike this year.
Warm, not hot. We had some promising data last week, but warm is uncomfortable for many market participants and uncomfortable for the globe because we haven't been in an era like this in a long time. Bond yields are attractive if you want yield, but not attractive if you don't want volatility and if you don't necessarily trust central bank action right now. And then obviously the geopolitical headlines that I don't need to tell anybody about that don't seem
right.
to
So
be
you have
going
all
away.
of that, and then you said that but the
All of
markets are
that-
going to go up. So
all
this
of that-
This is what I think is has a lot of our viewers saying, well, what are we supposed to do in all of this?
Right. So I already went over the warmer inflation era, the higher bond yields. The portfolios of yesteryear are not working. They're not going to work. So you add something like commodities in, and you've got to hedge against some of that geopolitical risk that's affecting energy. You hope that the Fed doesn't raise rates. I'm on the side that I don't think they will in September. I don't think they will in October. I think the earliest possibility is December.
Because you have one in your calculus. There's one rate hike.
Yes, but I don't like it. I hope that they don't.
Okay.
I think-
And I only asked because we had Bank of America. Brian Moynihan was on. Bank of America thinks there's going to be 3 rate hikes before the end of the year.
I would disagree with that. And I think it would look like a mistake if that were the case right now, because first of all, hiking rates doesn't add people to the labor force. And a lot of the inflation issue that we're having right now is a supply issue. Yes, we have very strong AI demand, but we also don't have enough supply to fulfill that demand. Hiking rates doesn't create more semiconductors.
Mm-hmm.
And we've got a supply issue in energy that we're all very aware of. Hiking rates does not create more oil through the Strait of Hormuz, right? So I think hiking rates at this point, although the economy is strong, it's stable, it's not overheating, in my opinion. GDP growth is not overheating. The labor market is not overheating. Consumer spending is not overheating. We have warm inflation that, again, is uncomfortable. But I think if we start to hike and create a hiking cycle, it kills other things in the economy that we don't want to hurt at this point.
Jim Bullard's point was it's a lot harder to control inflation when you have a bad economy. His thought was if he was still on the FOMC, he would raise rates now. I don't know about how many times. I don't know if it's 3 times. But to try and bring inflation down now, when you can do it without it being such a painful decision because the economy's in need of help as well.
Just now, headline, Trump expected to attend White House crypto meeting later today amid Senate Clarity Act deadlock, which is actually something that's really important because the Clarity Act has been kind of stuck in the Senate. It's likely not going to get voted on until September at the earliest. Maybe Trump can get something done for crypto.
Yeah, and look, I respect Bullard. The Fed doesn't call me for my opinion, right? They're more likely to call him. But I think right now, yes, the economy could probably absorb 1 or 2 rate hikes. It's not about 25 basis points or 50 basis points. It's that if they start now, the expectation is that they will keep going until inflation reaches target because Chairman Warsh has been so committed to that 2% target. So let's say they raise in September. I think markets will expect that they'll keep going until they get to their goal. And that's what I would be concerned with, because getting to that 2% goal has proven to be really, really difficult already for the past several years. I think we would have to hurt quite a few things in the economy to actually get there. So I would prefer we stay at this point, stay at this level, wait and see if things come down on their own while the economy remains strong.
It's actually Wednesday. Wednesday is going to be that meeting. Paul Atkins will be there, so it's not later today. Kraken executives, Gemini executives, NASDAQ, NYSE. I think Robinhood, Coinbase executives might be there as well. So Semaphore reporting on Wednesday, you're going to have this meeting around crypto. I don't know what Trump's going to be able to get done, to be honest, because ultimately you still need Senate to vote on this, but might be a catalyst later this week. By the way, Alibaba's Qwen model, can you guys believe this? It's been downloaded 3 billion times. Their Qwen open source model. I mean, I couldn't believe it. Like, that's an incredible amount of adoption. Where the big thing about AI is there's still billions and billions of people that haven't accessed it yet. But 3 billion downloads in 6 months. Google's open source model got 418 million. Meta got 227 million. I mean, it's just unfreaking believable, the amount of momentum that these models are getting. And that, once again, is kind of the bear case for OpenAI and Anthropic, which is if these models continue to become cheaper and continue to become better than everything else, does the market get that excited? Having said that, there's another clip of Gavin Baker from this weekend. He thinks the S1 is going to be so big that investors are not going to be able to comprehend how good the numbers are.
But I do think the Anthropic S1 is going to be really important. And I think it's going to break a lot of people's brains. And the reason is I think there are a lot of macro and value investors who are very confidently making these prognostications about AI with the assumption that tokens are subsidized. Anthropic is generating cash. And like this fact is, I would say, kind of known in the world. And I've actually never really spoken to Anthropic, but it just, it feels like there are enough signals that if you're to read the tea leaves of what has been said in public, they're generating cash. They're profitable. Open source tokens are profitable. Anthropic is profitable. OpenAI, if they're not generating cash, they will be imminently. SpaceX, same thing. And when I hear these macro and value investors who are ignorant, they're very smart, but they're ignorant of the facts, and they're making an assumption that tokens are subsidized and this is all going to collapse in some circular financing bonfire, they're just wrong. The overwhelming majority of tokens are profitable for everyone in the chain. Everyone. And I think the Anthropic S1 is kind of going to make that clear. But when I listen to these macro and value investors talk about AI, it's a little bit about me saying, I'm very bearish on the world economy because oil's at $500 a barrel. And you know what? If oil was at $500 a barrel, that'd be a good reason to be bearish. It's just not. Like, they're just wrong. Like, the simple fact is wrong.
They're paid in some ways to be doom scrollers and merchants of doom.
He's obviously very excited about this take, right? And look, I think there's truth value to that argument, which is why Jensen is so optimistic about the Frontier Labs. But there's also a lot of signal around open source. There's a reason why Jensen has been pushing open source so aggressively. I think part of the reason is to challenge the business model of an OpenAI and Anthropic because they're challenging his business model around chips. And so there's a bit of back and forth that's there in the industry. I think what resolves all of this is the S1. That's it. It's time for all of us to stop speculating. Like, are these tokens profitable? Will they continue to be profitable? Will the Frontier Labs be able to become even more frontier than they are today without having open source things catch up to them? Because it's also just supply and demand. Like, if there's a lot of tokens that are out there and they're all the same, you're not going to be able to inch a margin on the tokens that you think are so much better than the other ones because people will just switch. Or are the tokens so much better from Anthropic side than every other open source model that's out there? Again, the S1 will give this evidence. Same thing for OpenAI. That the idea of people switching is like inherently, as Gavin Baker said, ignorant, because that's just not going to happen. Which maybe that's true. Maybe there is going to be no switching because no one wants to run their own models. No one wants to build it themselves, and no one needs to run these things locally. I think we have a lot of mixed signals in the market. We have a lot of different perspectives in the market. At this point, we just need the numbers. And that's the biggest reason for these guys to go public. Because if that narrative isn't true, or even if that narrative's true, but it's not as true as people have been presuming, I think it helps the semiconductor trade because a lot of the volatility on the semiconductor trade is OpenAI and Anthropic are going to blow up. If these guys can become decent, profitable companies over the long term and continue growing at relatively strong rates, even if it's not 10x year over year, it's going to be decimating for Zitron and Burry, because their entire thesis is the sort of linchpin of the bubble is OpenAI and Anthropic. And if those companies somehow, even if their CEOs are a bit quirky, end up being successful and can turn a profit every quarter in the next couple of years, and like the business models are real, it's going to be really hard to say the entire thing is fake. And that also means all the software companies that were sold off for no reason also was fake. Because as Baker says, everyone should be benefiting from cheap tokens, and particularly the software companies, which is why those discounts in February and March were just really strong for the software names, and we've seen them get rebounded. Bloom Energy 241 as that continues to go green. Is VG up on the day? VG is down 1.3. Trouser says, good morning, Amit. I missed you. I missed you guys as well. I had a fun weekend. I've almost finished Bohemian Rhapsody. I still have like 30 minutes left in the movie. I realize I cannot watch a 2.5-hour movie straight. So I've been watching it in parts over the weekend, and hopefully I will finish it tonight. Also, you guys didn't tell me about this Queen Greatest Hits album. I wish you guys told me after watching or after listening to Bohemian Rhapsody to listen to the Greatest Hits album. Because, bro, I want to break free. Like, banger. These songs are Killer Queen. Another One Bites the Dust. I've heard Another One Bites the Dust before. I didn't know Queen made it. Bicycle Race was great. Don't Stop Me Now. I'm a Queen fan, dude. I'm a Queen fan. It's like, it's my favorite band of all time. I'm saying that right. It's my favorite band. I mean, this music is incredible. Somebody to Love. They have a song called Play the Game. You know, we talked about the game on Friday. You know, that was an important quote that I put out there. Like, I'm a Queen fan. I'm absolutely a Queen fan. And Bohemian Rhapsody is top 10, 100% all time. All time. It was great, dude. I want to break free. I mean, like, dude, I've been saying that in my head for the past 24 hours. Like, it's great. I love discovering new music, dude. Like, I was on the highway yesterday with FSD just listening to Queen. Usually I'm listening to Drake or like Travis Scott. Like, I was listening to Queen. It was great. SpaceX up 5.5% as that goes up. Did you just discover music? No, but I just discovered like really important music from the 70s. Dude, I think I'm on a 70s and 80s binge now. I just want to discover all the amazing music from that era. Because honestly, listening to that in 2026 makes you think the music of today is like full of shit, to be honest. Like, I like rap music, I like hip hop, but 70s and 80s music just feels iconic compared to whatever we're listening to today. I'm a fan. I am a fan. Corning 172. Look at that, breaking out over 170. It's very nice to see. Bloom Energy at 242, and then Keel still up 7.6% on the day. Yeah, I tweeted about it. It became news, dude. It was weird. Like, the freaking Grok algo turned this tweet into like a headline that people saw on their Explore page. But I tweeted like, hey, I just discovered the song. Got a lot of shit for it for just discovering it. But a lot of people were also excited that I discovered the song. I have looked up Freddie Mercury's ancestry. He's got some Indian in there. He's got some Persian in there. I've been watching so many interviews of him over the weekend. His life was pretty incredible. Yes, AC/DC, Led Zeppelin, all of these. I have a lot to listen to, but I got plenty of messages to make sure to check out all this stuff. Idris, thank you for the super chat. I will be on a journey over the coming months. Dreams. Oh, you guys didn't tell me the freaking TikTok guy drinking the cranberry juice. That was Dreams in the background. I have heard that song before. I think we need a different song of the week. I've heard that song. No one wanted to tell me, oh, that's the guy who went viral on TikTok on the skateboard. Yeah, it's a good song. It's not a bad song. It's a great song. But these Queen songs I discovered over the weekend were just amazing. Robin right there, 96. By the way, money market funds have just exploded again. Folks, we are at 7.93 trillion over the past 2 weeks. 18 billion were added. So going back to kind of Tom Lee's case about this like melt up, even though he thinks we're gonna go down 10% after we hit 8,000. To get to 8,000, we have plenty of money on the sidelines, like plenty of money on the sidelines. And it does feel like that money, you know, is eventually gonna have to be allocated somewhere. And it might end up being equities if they continue to outperform. But there is plenty of money just waiting to kind of find a home in the right spot. Uber and Zipline partnered with the goal of hitting more than 1 million drone deliveries per day. Drone delivery is something we don't talk about that often, but it is going to happen and become bigger. I mean, there's different parts of the world where drone deliveries are becoming a big thing. In America, it's like somewhat emerging as a bigger thing, but yeah, I think drone deliveries is going to be pretty obvious. And as long as it's done in a more safe and regulated way, which is what I think these drone companies are working on, Reddit down 2%, that could be another tailwind for Uber. So we're going to have to see, but there's money that is out there. There's more money on the sidelines means that people pulled it out of their stock accounts to wait for the drawdown. Potentially, a lot of that money is also just generating interest. So that's how it grows, right? Because the money is getting like 4% in the money market funds. A lot of it's institutions putting money here and there. But if it is money coming out of the stock market, there's buyers to replace that money that's coming out because stocks are at all-time highs. Which just goes to show how much money's out there. Like the fact that money market funds are going up and the S&P is also at all-time highs is incredible. And money markets haven't really gone below $7.5 trillion all year. I mean, we've never, I think there was one, in April, we had a $150 billion decline, but that was really to pay taxes. Outside of that, it's been well over 7.5. The long-term average is about 3.7 to 4.2 trillion in money markets. And so we are, well above that since then. Mag 7 still red. Most of them going red. Okay, you guys have a lot of recommendations. I will have to take my time to go through all of these. I'm going to aim for at least a song a week, and hopefully can rank that up to like 2 or 3 songs a week. But a song a week is going to be the goal. Especially because I'm getting into all these Queen songs, so I feel like I got like 10 new songs over the weekend that I'm still exploring right here. Iran, that's still up. Figma, that's down. Marvell, 7% of Marvell. SanDisk, whoa. Wow, dude. 1,800. I have this in the stock draft at freaking 2,300. The fact that this one might actually, I'm only down 10% now. I was down 25% at some point in July. The fact that this one might actually come back is kind of crazy, dude. Like, it's kind of crazy. Guys, it's up 80% in 2 weeks. It was at below 900 on July 29th. 2 weeks later, it's at 1,800. Sorry, below 1,000. It was like 980. That is crazy, bro. Absolutely crazy. I mean, even Micron hasn't had that type of a run. Now, granted, Micron didn't fall as much as SanDisk, but SK Hynix also getting a move right here. It feels like the cyclicality and the structural like concerns, a lot of that's just, it's just being priced in and like the market's moving on from it. Now, having said that, at what point does the market start caring about it again on the next earnings or the next big memory headline? I don't know. But as a trade, it's worked out. And obviously, if you bought it around this range, because if you bought it at 1,800 after a dip from 2,300, that's a pretty big dip to buy it at. You're breaking at least even here. It was at 1,400 on Friday, I remember. Low volume run. SanDisk volume is 8 million shares. Average volume is 14 million. SanDisk is not that low volume. It's done more than half its volume, and we still have 4 hours left in the day. This one feels a bit more real, but it also feels like the Apple memory ban is kind of what caused it. S&P volume is still very low. Seagate, wow. Wasn't this thing at like 600 last month? 698 it fell to July 29th. Now $1,004. Yeah, for that's true. For a $1,500 stock, that's a lot of high volume. I mean, actually, this is not like a $100 stock. 8 million shares is definitely a decent chunk of volume here. So you're seeing more of that excitement. Yeah, SanDisk is also 90% institutional holding. So is AppLovin. That's the other reason AppLovin's volatility has been pretty bad, because when it gets sold off, it's not retail. It's the toots just like dumping it. So this is not a heavy retail name. This is way more institutional, and that's why it's not been able to rebound. Again, I talked to an AppLovin employee over the weekend. His biggest thing was their e-commerce TAM needs to expand. Their mobile gaming TAM feels like it's saturated, and that is why you've not seen the name kind of recover even after 55% growth rates. Wow, Ferrari sold their first vehicle for $40 million. Who the hell is buying a Ferrari EV for $40 million?
You mentioned that the $40 million Ferrari EV was used for tax deduction purposes.
Not used for tax deduction.
The money went to charity.
Money goes to charity. So if he chooses to.
Okay, now it makes sense. Now it makes sense.
he could get a tax deduction. That's why when we have these rankings of most expensive X ever sold at auction, you have it in watches, you have lots of things. Some people remove those charity auctions because is it really a like for like comparison? Because really he gets if he wants to, probably a $13 million tax deduction off of that $40 million purchase. So what's the real price? So some people strip those numbers out of the rankings, but either way, the most expensive EV sold, the most expensive new car ever sold. And this will be huge in the debate over whether that is the ugliest Ferrari ever launched or whatever. Plus, we've got the fact that the company has said they're sold out. So they're sold out, and one just went for 40 million. How can you say that is not a success? That's what Ferrari will say.
How did they misfire on the estimated value? Was it just a placeholder $1 million?
They didn't misfire. What they probably did, and this is probably be the tax basis for it too, because you get the deduction of the fair value of the total auction price. So the fair value was probably $1.1 million. So the sticker price of an EV of a Luce is about $700,000. This was special paint, special this and that. Plus, it was the first ever made. So 1.1 is probably like the market value of that.
Got it.
And that's what they put it on. So they knew it was going to go for more. Estimates. Most people.
It makes sense, bro. Who's buying that for 40 million if there's not some type of tax benefit? It looks like a new Mazda 5. 40 million is a little aggressive. A little aggressive. Okay, let me tell you guys what the quant told me and Steve over the weekend around these hedge funds. So the podcast will be uploaded tomorrow. There's a lot of stuff to get into, but this was the thing that stood out the most to me. So I asked him, I was like, why are these hedge funds getting these billions of dollars of assets if they're doing like 10% a year, 15% a year, and 15% is a really good year? Only the Leopolds or the Cathys, like the ones who are super like concentrated in a niche, can have these massive outperformances. Why is like your Millenniums of the world, your Citadels, they still average like 10, 15. It's not like 30, 40% a year. Like, why are they getting all this money? And here's what he said. NVIDIA, by the way, getting a red candle right there, 225. He said, so the S&P 500 is going to do 15% this year. And this is how it's typically going to go. It's going to go up and down and up and down and up and down. It's going to be volatile. It will get you to that 15%. Okay. What the hedge fund sales guys are promising their clients is we're going to get you that same 15%. But the way we're going to get there is like this. That's it. So you're not going to have to go through this and this and this when Trump tweets that we're just going to do it like this. So it's just lower volatility. And I was like, that's why people are investing in hedge funds. He was like, dude, when you're wealthy, all you care about is getting the return, but not having to like lose sleep at night if you're down $50 million because you gave a hedge fund $300 million to manage. You should be down like 15 million because the hedge fund is hedged to the downside. And that's it. That's it. He was like, that's why these funds get so much money. He's like, everyone knows they can make more money just putting it into the S&P. But the way they feel during the Marches of the world or the Julys of the world is what the hedge funds are promising them to feel a little bit better than what the average investor feels like. And so it makes sense when you think about it logically, right? Because, if you're an investor, and then if the market actually really does take a dump, the hedge funds will underperform. But in 2022, Citadel, I think, did 3%. S&P was down 20. So like, that's what you're really paying for, like not losing money when you're putting that much money in. Yeah, it's effectively the Sharpe ratio, 100%. And so like, that's it. That's why you have all of these massive quantitative strategies. Now, there's other reasons for why, quantitative strategies are important and how money gets traded, but you're supposed to remain relatively delta neutral. You're not supposed to take massive risk. He was saying, at Citadel, for every stock you buy, you have to have a stock you sell. Like there has to be a short exposure to your long exposure. And then the penny of a penny that you make on the fraction of the market making, that's your profit, which is very profitable. But you're not supposed to buy Rocket Lab at 4 and hold it till 80. Like a hedge fund is not supposed to do that. And I thought that was fascinating. And it's a multi-trillion-dollar industry. So if you can promise S&P level returns with less volatility, that's how you can get that momentum. Yeah. Meanwhile, retail's freaking leveraged up 5x on Micron. So it's just a different world in terms of, how retail investors either take on leverage or buy and hold versus how the hedge funds barely try to beat the S&P because their pitch isn't to beat it. Like Leopold's pitch is to beat the S&P, but he has a whole different style. The average hedge fund is just like, hey, we're going to make sure this product compounds, but it doesn't make you feel horrible when you have the worst of it. So that's why they don't buy Tesla. It's actually a great company. That's me coping. Yeah, I mean, look, Tesla, this is why Tesla, Palantir, Robinhood, they never show up on the 13Fs. Nebius doesn't show up. CoreWeave doesn't show up. I mean, here and there, some of the big guys will take a risk on it, but Amazon shows up, Microsoft shows up, Google, because they're not prone to take risk. Like the whole game is getting a return without AMD barely shows up on the 13Fs. Why? Because AMD wasn't as consensus as NVIDIA. And NVIDIA now seems like it's risk-free based on the multiple and based on the fact that everyone owns it. By the way, speaking of NVIDIA, the S&P has compounded 74% over the past 5 years. 84%. NVIDIA is responsible for 10 of that 84%. That's how matters. 12 of that in S&P 500 5-year gain. Apple is about 5% of it. Microsoft, Amazon, and Google are 3, and 2 percentage points. Those 5 stocks, Microsoft, Amazon, Google, Apple, and NVIDIA, account for 25 percentage points or 30% of the total S&P 500 return over the past 5 years. And that's why these names continue to get capital, especially from hedge funds, because they're just not as risky as the other ones. Yeah, exactly. If you're super wealthy, 5% on $1 billion is fine. But that's also why this 10-year is so compelling, because if you don't need to take any risk and you can get 4.7% on like $1 billion, like you're happy, right? And that's why this market's a little weird with the S&P at all-time highs and the 10-year basically at 52-week highs, because if this thing doesn't come down, at some point, money's got to leave the market and go to the bond market, right? Or do we get to have both go higher with the expectation that oil's coming down, which is why the 10-year will take a break. SoFi, are we getting some love today? SoFi, 1835. This one's kind of been stuck around the 17, 18 range, but it hasn't really revisited 15 and 16, which is good to see. So yeah, obviously, if you don't have $1 billion, you're willing to take more risk to compound, but also retail's willing to hold more to compound, Like we're willing to deal with a 20% drawdown on Nebius because you believe in that long-term goal of it. The name of the quant, his name is Anane, and he's setting up a new London exchange. Let me see if I can link his stuff. Oh yeah, this is the guy. So he did an interview 3 months ago on a different thing. It's like a 10-minute video. You can watch this here. But our podcast will be out tomorrow. I think it was some good stuff. Piper Sandler, price target 22 on SoFi. We need them to have $30 and $40 targets, though. The street is so afraid of putting a $30 price target on this thing. I think one person might have a $30 price target, but we need a lot more. I put my thoughts on Grab, as Zeta, Shopify, and Reddit's earnings on the weekend. So if you go to my Twitter, you can read everything, basically my Q2 review on those companies on Saturday. I think Grab is also still stuck with Uber, to be honest. Those AV fears, which I think are becoming really dumb, it's affecting every Lyft, right? All these companies have been stuck on this idea of autonomous taxis. And I just don't think it's happening anytime soon. So I actually think when Uber breaks out, Grab breaks out, Lyft breaks out, because these companies are producing real cash flows, growing adjusted EBITDA 40, 50%, but the multiple is not there. And so again, I think Micron probably outperforms Uber by the end of the year, but in the next year, I would imagine Uber is not going to be stuck at 76 if this AV stuff goes away. But if the AV stuff only accelerates, then yeah, the ride-hailing companies are going to be stuck at some. Here's the other thing we're not talking about. What if self-driving is the commodity? Like we're talking about LLMs being a commodity. What if self-driving is the commodity? What if FSD is not special to Tesla? What if your new Mercedes, your new Ford, your new BMW has the exact same technology? The data's a commodity. All those miles that Teslas have driven to give it a data moat. What if that is synthetically created via NVIDIA Cosmos, and it's, just like, it's not like the training is that special when we think about self-driving on a global scale. Because if that's the truth, then you've got I think then Uber's absolutely dirt cheap if that's the case. Because then AVs will win, but it's like, what AV company do you give the multiple to? You definitely don't give it to Tesla. What's going to be special about it? Optimus is going to have, there's going to have to be other stuff. You don't give it to Waymo which means Google, right? Like, what's special about it? If anything, you give it to NVIDIA. Like, NVIDIA's going to be the one selling a ton of that stuff to all these different distributors. NVIDIA 226. So I'm just saying, FSD right now is a moat for Tesla. But is there a world where, just like the LLM has been a commodity, why can't self-driving become a commodity? At the end of the day, it's just data. And that data, yes, Tesla has an advantage on it. Don't get me wrong. That's why FSD is working. But like, Waymo's also working, you know? NVIDIA's obviously thinking self-driving is a moat they're going to try to go after, or a sector they're going after. Micron breaking out the highs of day, 1,030, up 6%. I mean, I don't know. If there is a world where self-driving is a commodity, it's not that special at that point. It's just really not. If everyone has it, then everyone has it. Like, at that point, you're going to have to really love Tesla to buy it over something else that has. And Nebius 270 as that continues to go green. Waymo can't produce the margins to be profitable. Yeah, but Tesla's also not super profitable. Like, we're looking at their margins, guys. They're not making money. like, again, I love Elon, but it's just like the Tesla story is Optimus. It's not like, notice how much he barely talked about FSD on the call, or barely does talk about FSD publicly anymore. Remember that quote he had last year? Elon said, the difference between Tesla being worth 0 and $1 trillion is self-driving. I mean, well, self-driving's not really the thing that's exciting anymore, so now it has to be Optimus, but it's not like they're super profitable because they can manufacture. They can manufacture with 16% margins. 60% margins are not a reason to be paying trillions of dollars for the company. So I don't know. It's just something to think about. And I don't know. I feel like I would have a different perspective if Elon was talking more deeply about the mode of self-driving, but he just hasn't. And if he has, someone link it to me, because it's been like 5 months and you don't really get that type of vernacular from him anymore. It's more about Optimus and data centers and things of that nature. Is Meta still getting hit? Meta 573. That one's still down 3%. Well, that's going down. EYPT is getting smashed today. So, you know, this once again goes to what happened with AbCellera last week. You're either in a biotech and it's going to work, or it's not going to work. EYPT, they failed their trials. That's why the stock's down 70%. 10X was down 80% last week. AbCellera did well in their trials. That's why AbCellera was up 40%. So primarily it's a question of just how confident you are that these names actually win. Wow, SanDisk 11. Goodness gracious. It's not slowing down. My stock draft needs this one. Same thing with Bloom. Yeah, Waymo itself doesn't need to be profitable. Google will integrate into their ad network. Look, the stock price tells the story, guys, on Tesla. And again, I am an Elon fan, but it's like this thing is down 22% year to date. At one point, it was down 35%. And at some point, there's going to need to be a vertical that gets people excited. Optimus is years away. FSD is just not really growing that dramatically. Energy's cool, but it's not contributing to the bottom line. Elon already said we're going to be negative free cash flow for the coming years. CapEx is increasing. So like, but then again, if someone says, oh, well, Meta's a better buy than Tesla, it's like, well, wait a second. Meta has all these lawsuits as props. So it's like these stocks that are at this point of the cycle, if a stock you're invested in is down, there is a narrative issue or there's a numbers issue. And I think any stock that's like meaningfully underperformed with the S&P at all-time highs, with SMH almost at all-time highs, means there's something going on with the narrative of the company, SMH almost 600, or there's numbers that are just not compelling. Because again, we're in a bull market. Like there's an issue with Bitcoin that it's not participating in this bull market. Maybe it's the Clarity Act, maybe it's liquidity. You know, any stock you can point to, there's something that's going on. With Meta, I think these lawsuits are now starting to flare up. With Uber, it's the fear that AV is going to kill their business. With SoFi, it's interest rates. With Grab, it's oil prices. Micron, it was cyclicality. Now that's starting to break back out. Not at all-time highs yet, but it's getting there. So, I mean, a lot of these names, MicroStrategy is just proxy for Bitcoin. Nike, lack of sales. T1 Energy, people don't think they're going to get their solar facilities funded, nor do they believe that solar is really the future yet. But for the names that are winning this year, you know, I think earnings have been strong and their narrative has been strong. For all the SaaS names, you could have pointed to narrative, but that narrative is hopefully starting to somewhat change. Who on earth is selling Meta right now if most 13F spot? Probably the algos that don't like that their court case starts tomorrow and they could get some really bad news. I feel like that would be the reason. SK Hynix, that continues to go green. Last weekend, Grok told me the reason FSD is still supervised is because Tesla wants to continue to collect human data. I mean, I think that could be part of the reason. I also just don't think regulators are ready to let FSD out into the wild with zero geofencing. Like, that's a big political hurdle, dude. Like, that's, you know, like the entire transportation sector is going to have to be ready for across the country cars to be out there in the wild. I mean, Waymo is still geofenced with no driver in front of them and be perfect. Like, it can't be somewhat good. It has to be perfect. NVIDIA 227. I feel like that's a long time away. I still don't think that's happening anytime soon. I really don't. Maybe if Elon was still super buddy-buddy with Trump, but like, and then who knows who the next president is? Who knows if they're even going to care about self-driving as like a major initiative? Like, if that's the case, I mean, many of these names that are being discounted because of that feels like they shouldn't be as discounted. Okay, NVIDIA 227, SpaceX still fighting with 150. Got to 149.68. It is trying, but it's not there yet. Oil still flat. 10-year still pumping, man. 4.71. This can't last forever. They're going to have to do something pretty soon. I mean, if that thing gets up to 4.8, you're looking at April 2025 levels with the S&P at all-time highs. It's not like we have to crash or anything. It's just weird. And at some point, then you talk about everything that's going on with the Japanese yen. Like, the Japanese bond yields have exploded. They're at new 52-week highs as well over the weekend. This is not the stuff that we necessarily want to see. Iran making a little move. Intel, I think, is a buy. Dude, the CEO's buying. Like, it's kind of that simple. We talked about Intel last week. I bought a little bit last week. I think I'm going to buy more. It's down 50% from the highs. CEO's buying. And they're raising money for a reason. Like, I think Intel, again, I don't love the valuation on this, but I think the company is just too important. And, you know, at the end of the day, if we're talking about CPUs continue to increase even more exponentially than GPUs, I would imagine Intel, AMD, ARM, those are going to be winners. It's just Intel has taken a pretty nasty haircut from the highs versus AMD. And AMD's back to freaking 500. It's almost like the AMD dip didn't even happen. It happened for like less than a week, fell to 430, right back to 515. Now, granted, we got a drawdown in semis. Intel's going to take an Intel, Bloom. These names trade at a pretty aggressive multiple. So I think those get hit heavier if that happens. Mercedes dumped their FSD program. Yeah, it's going to be up to NVIDIA to create Cosmos with synthetic data to make self-driving commoditized. Dude, do you guys remember that Jensen quote where he said self-driving could be bigger than GPUs? This was like either in Q4 of 2025 or Q1 of 26 on the earnings call. But he was just like, yeah, we think, you know, the self-driving market can be bigger than that. And we want to be the distributor that creates the data foundation that allows any car to tap into it. I don't know if that's going to happen, but if it did, it would definitely challenge the value of FSD in and of itself as having the only data. And that's when Mercedes would, you know, go back to adopting it. Yeah, 6 months ago, right? Yeah, he did say that on one of the calls. Now, maybe he was talking his book, but like he's trying to get investors more excited about all the different ways NVIDIA can tap into growth. 254 on Cerebras, still up 16%. As that continues to go green. Okay, what else do we have? Friday was relatively flat. Okay, Cerebras, Wedbush upgraded them today. That's why it's up. Cerebras said ultra-fast delivers up to 750 output tokens per second, up 14 times faster than OpenAI's standard processing tier. Wedbush highlighted their role in powering GPT 5.6 Sol ultra-fast service tier. Okay, so you have more around their OpenAI partnership getting some love. Wow, South Korea, $200 strike, EWI calls, 3 million went into those, expiring on September 11th. So you're seeing more money basically flow into SanDisk and memory, which is getting more of that love. Oscar, this one got hit pretty hard after earnings, still down 3% here today, but at least it's somewhat better than what you had right after earnings. Ariana Ren, yes, 43, small position. I don't know, dude. I think a run to 70 is not that crazy, but they've just got to execute. And they're 15 billion market cap. CoreWeave and Nebius are pushing 50, 60 billion. And they have the most contracted power capacity. Like, there feels like a disconnect that I don't know what to blame other than management at this point. And it doesn't feel like a reason to sell, but it definitely feels like if management can turn things around and just get the street to be more excited and really get some deals flowing, this thing should not be under $70. But we're gonna have to see if that happens. SK Hynix almost 177. Celsius, again, they had that founder from Rockstar Energy take a stake in them last week, so I think some of that momentum is continuing. That's up 3.4%. Yeah, Applied Digital's also had a really nice run this year. I think got to 45 at one point. The lows were like 20. Yeah, got to 50 actually back in June, then fell to 22. Now it's at about 30. Oil still flattish, 82. We're seeing some NVIDIA and Micron calls come in. About 7 million worth of premium, 6 million on Micron. No, 6 million on NVIDIA, 2 million on Micron. Strike is 240 NVIDIA, August 28th, so that's an earnings play. Micron's 1,000, August 21st. That's this week. What do we think? Do NVIDIA gets that 240 love after earnings? Or are we kind of just stuck in this range that we have been in? Because I think the fear is, let's say we do, like, is that a blow off top before we get into August, before we get into September? Which I think a lot of people have been thinking. Or do we just keep this momentum going in September, October? Like, I want to say that's the way it's going to play out, but it's also like, dude, that feels so euphoric that we're not going to have any ball. That's why I think Tom Lee has this whole 10% drawdown thesis, because he's like, there's just no way this can continue as aggressively as it is. By the way, Citigroup has the $30 price target on SoFi. They're the only one that has a $30 price target. DBS is 28. Piper Sandler today, 22. It just might take more time to get there. Ren saying, I want to break free. Dude, that song is great. Another One Bites the Dust. Oh my gosh, bro. I've like heard these things before in the wild, but I didn't know Queen was responsible for them. You know that the actor who played Freddie Mercury won Best Actor at the Oscars for his performance? The Oscars is stingy with giving the best. They made Leo DiCaprio wait 20 years before Revenant to finally get a freaking Best Oscar award. They ignored Titanic. They ignored Inception. They ignored Wolf of Wall Street. Like, they gave the Rami Malek, the Freddie Mercury guy, on his first attempt, Best Oscar or Best Actor. Like, that movie really resonated with people. Figma goes green. Marvell 238 as that tries to flip green as well. Here was Mike Wilson earlier today talking about gold. Gold continues to make its run. And here's his argument for why this one is working.
You've gotten the market right if you underestimated its durability?
No, I think we probably were the first ones to talk about this earnings recovery. And even we underestimated the strength of it. So yes, we did underestimate the power of it, but directionally, I think we were right on that. I think where we've been surprised is probably the durability of the AI CapEx and just how much that has accelerated and how much, quite frankly, how much the market has been willing to absorb on the issuance of both credit and equity.
Well, the reason you've been good at that is Jim Karen. It's got nothing to do with the equity side of the shop. Bring up the chart right now. This is the emotion. Many of you have forgotten this. Stocks, you can go down in stocks. It's a shock. Now, this chart ends in 2022, but there's XPS. It's wonderful, great, wonderful, COVID and all that. And then there's a big rollover in 2021, 22, where are you brave enough to catch the falling knife? When the market rolls over like that and my personal finance is troubled, how do I get back into the market? How at the margin do you buy when you see the sweat of that chart?
Well, the really challenging thing of 2022, as you know, for retirees was that stocks and bonds went down for the first time in really our lifetime. And so there was no hedge. So even though the decline in equities wasn't as severe as it was in 08 or in 01 or 02, your 60-40 portfolio was down the same. So that was a change. And I think that was one of the things that made investors apprehensive to step in. It was like, holy smokes, I'm getting hit on both my defensive stuff and my offensive part of my portfolio. So I think people froze up. Now, our job is to remind people that there's value at some point. And I would say we navigated the 2021 top extremely well and the 22 downturn. We probably overstayed our welcome a bit in 23 and got back on board in 24 under the story that we're telling now. But as a person who has their money in the market for retirement or long-term investor, you really should avoid being shaken out on both the top and the bottom. So in other words, chasing stocks is as damaging as selling stocks at the bottom, in my view. So that's why we like dollar cost averaging. That's why we do still like diversified portfolios. 22 is a challenge on that. It ended up working out for folks who stayed fully invested.
And for those who stay fully invested, their faith in equities has been restored. Maybe for bonds, not as much, given that the performance has not been as great. Is there a way to get all your defensive, your bond-like exposure within equities? I've heard some people talk about the idea of swearing off fixed income completely and perhaps owning insurance companies as proxies for bonds. You get the price appreciation, you get the dividend. It's kind of like a win-win.
Yeah. Well, what I would say is that these asset classes are now more closely correlated. So they're just not going to offer that natural diversification benefit that they have historically. So that means you need to do other things. So there are other types of investments. You were mentioning earlier, like gold or maybe even Bitcoin or some of these things that can defend against inflation. So we've been a very big advocate of gold, not so much as a yielding instrument, but as a defensive asset. That doesn't mean you abandon fixed income, but it does mean you reduce your duration. So there are things you can do within your fixed income portfolio to make it more valuable. It still provides some diversification benefit without taking too much risk on the duration side.
So when you talk about gold was acting like a meme stock at the beginning of this year. I mean, was that just kind of a unique one-off period, or can we return to things like that?
Well, I would say that gold has been in a bull market for 25 years. I mean, people kind of woke up to this idea more recently. At the beginning of the year, and this probably is a good place to kind of gravitate to for the rest of the discussion. For this year, I would say we've had basically one big commodity rotation. So coming into this year, you have to remember at the end of last year, the Fed started printing money again, right, with this reserve management program. And that led directly to gold and silver stocks taking off. Then we went into rare earths and metal stocks, then energy stocks, and then semiconductors. Now, what do all those have in common? They're all commodities. Okay, so it's kind of interesting to me that that's what's been going on. And that may be exactly what people are doing. They're looking for things that are not stocks, but commodity-like to offset, the risk they have in their portfolio with equity-like risk.
Gold, once again, getting some love today. I mean, he is right that these assets have started to effectively perform in line with each other. And the real divergence has been individual stocks against the commodities. But the commodities themselves have, really gone up together or gone down together. Bitcoin obviously also has diverged to the downside this year, but it's been a stock picker's market. And obviously the semiconductor stocks have been some of the best performing ones. NVIDIA actually giving us a 3-month high roundabout. I mean, the last time we got anywhere near this was May what was this? May 12th. So it's been a while since we even got anywhere near 230. We are very close. Let me check resistance there at 230. I don't think he means chips are commodities. I think he means semiconductors in general, because of the cyclical nature of them. Like memory technically is a commodity, but then again, memory has not been acting like a commodity. But yeah, the divergence has been due to the demand cycle and the earnings growth for many of these. Okay, NVIDIA 330. Let's see. 230. I'm going to bet it's like 300,000 shares. 230 is 732,000 shares. Okay. It's going to be a little bit of work to get this to go up. But hopefully it can. Is Meta a buy right now? I think so. I do think, though, that these freaking lawsuits are just going to result in bad updates for Meta. And, I think Meta is a stock you can sell puts on and be happy if you get assigned. Like selling 520, 530 puts and being assigned there is not something I think to be afraid of. Buying the stock here, I think, is fine. The problem is if you buy the stock here and the lawsuits go against them, the sentiment's going to be bad. We saw this with Google. I mean, Google went down from like 180 to I think 120 or 132 at the lows every time the antitrust made it seem like Chrome was going to get broken up from GCP and all this stuff. Remember how stupid it was? Perplexity offered to buy Google Chrome. That's how dumb it got in 2025. That Perplexity was like, oh, we'll take it off them. It's like, no, that wasn't going to happen. That's how bad sentiment was. For Meta, I don't think we're there yet. I mean, 570 is pretty ugly price action, but I think like low 500s is that exact same type of like, okay, it's really bad. I mean, this was at 615 last week, So I think right now it's just playing with the algos. But the lawsuits seem to be the biggest concerns. Yeah, they tried to buy for $30 billion, which did not make a lot of sense. My Green Knight says, day one, love you, Amit. My Green Knight, thank you, and love you as well. Thank you for watching. Blue Shift says, Amit watched the 1980 Flash Gordon movie with Queen soundtrack. It's incredible. Okay, Flash Gordon. I don't want to say who is Sam J. Jones or Melody Anderson, but I do not know who these people are. I will put it on the list. If it's got Queen in it, then I'm excited to listen to it. S&P 500, 775, 71, as that continues to basically be flat today. All right, I think that's pretty much it for us today, folks. I don't see any other major headlines. I will be back on the close. I don't even think there's earnings today on the close, so we can kind of just chill out and talk. Yeah, there's nothing today. I'll see if I can get a guest on the show. Maybe we have Steve come on the show, and we'll just talk to him about a bunch of different stuff, but nothing crazy in terms of earnings expectations. Really, until NVIDIA, we're not going to see much. Maybe we get some of these updates from Nebius's meeting today at 6 p.m. Maybe we get some updates from Trump. Fabrinet has earnings. Okay, so we do have one company that has earnings. Yeah, you guys are right. They do have earnings. Okay, so we'll at least cover those earnings. Yeah, that's reasonable. High-speed optical transceivers, data center interconnects, and networking modules. This stock actually got a lot of love a few months ago. Year-to-date, 24%. It was at 740 in May. That's when I think a lot of people started talking about it. Over the past year, it's up 82%. All right, so it's one semiconductor earnings, but outside of that, you're not going to see too much. We'll see if the volume comes back towards the end of the day. I'll see if I can get Chris on. Again, he was on vacation. Yeah, maybe let me hit up Chris and see if he's down to come on. And we'll talk to him as well. All right, let's do word of the day. Let's also, a lot of you guys are asking for it in the chat. I'll show it to everybody. I wish Davis was here, but Davis did upload his Palantir wrap. He's been waiting to upload this for a long time. So literally, he's been waiting for the stock price to get above 170 to finally upload this. But we can listen to his wrap right here. If you don't care about it, that is the end of the show. We'll do word of the day after this. But this is Davis's wrap on Palantir. He actually sold some shares for the first time ever. And, Davis, good friend of mine, bought these shares at $10, kept up with the community, and recently over the weekend actually got to finally sell some stocks. So this was the Palantir wrap that he's been working on for the past 2 years.
Good morning, everybody. Y'all wanted the Palantir wrap at 100. We hit 200, had a little bit of a pullback, but that's all right. And you know why? Because Palantir is the fucking best, baby. Let's get it. Take it to the past like a history class. I was buying that dip when I was 5 and 6. Sitting here pretty on 7 digits. Hold up, wait a minute, I should hate that shit. Say goodbye to the 9 to 5 and I'm rolling with the Palantards. You know we're dimes. That means we're tens. We're getting drunk at the booths like we're some Hamiltons. Get it? Just like the bill, I don't fuck with the shields and I'm going in for that kill. If you're a fox with the glove or bear, this game better put some respect on Alex Cobb's name. Cause all these analysts are lambs. I'm about to put them all to shame. Cause I'm retail, I'm changing this game. They got Corey Kreider, we got Brett Kreiger. The former is a shin, the latter is a fire. Boy, I'm spitting fire, going higher like the SP. I got Go Carp doing his extensive DD. And Garcia, he's a troll, but he's a meme king. All the Palantards love that shanty where I sing. So I'ma shout out all my favorite Palantards. I'm talking about the ones that were rocking with me from the start. Shout out Bay-Ray, shout out Arnie. They some titans in the army shooting bullets cause they got the code and got the strap. Look at Nate and the Cots. He's my boy, he's full stack. They're calling Palantir a box, but they know it ain't black. It's an ontology. Started with Foundry, then we got AIP, and we went overseas, and we took over the UK with the NHS. Straight up like it was 1776. Now I got Palantir on my chest, on my shirt. Shout out Eliano with the Made in USA merchant. Don't you dare forget about the digital twins. I'm talking Chad Palantard, Chad Walquist. They never took no L's, only B taking wins. And I gotta pop this in, like when Carp spun that book on his finger. Now I'm steady eating all these steak dinners. 20,000 shares and $100 stock price, multi-millionaires. I'm not really surprised. Who's that calling my phone at the crossroads? Palantir Hotline? Hello Motel 6? Who are these analysts? They make me so pissed. Someone go and give me some fentanyl laced urine. There it is, boys. The Palantir wrap. You know, I forgot to shout out one dude, so here's a little behind the scenes for y'all. Rin. Who's this gentleman? He's kind of absurd. Can't pronounce words. He's got the worst fits. He's kind of legit. He's realer than these fake ass bricks. What up, Amit? Palantir wrap, baby. Let me know what we're doing at the 1 trillion market cap. There it is.
I don't think that was that bad.
It wasn't that bad. It was it was actually pretty freaking good. It was actually pretty freaking good, dude. Shout out to Davis. Shout out to you. Got all parts of the community. If you remember Chad Palantard, if you think the only Chad in the Palantir community is Chad Walquist, you weren't there in 22. Chad Palantard was the initial Chad. So there's a lot of inside nuggets that he mentioned there. But shout out to Davis. Super fun stuff. And, you know, sentiment around the stock is finally good enough to put something out like that, given how bad, you know, it was doing this year. But yeah, super, super awesome stuff. And fun to see the community continue to get excited about this. Palantir 174, AMD 515. You got Intel at 105, SpaceX at 148. It was better than anything Amit could make. It definitely, he spent a lot of time working on the wrap. It was absolutely better than anything I could have came up with. Like, he actually took it very, very seriously. All right, word of the day. Give me another word of the day. Let's see what we've got. Some of these semis actually going to rebound. CoreWeave as well. Getting some love right here. Okay, I've never seen this word. Supervenice. When one set of outcomes depends on an underlying set of conditions, changes the foundation enough, and the higher level outcome must eventually change as well. The stock's re-rating was a supervenice of deeper changes in the business, accelerating adoption, improving margins, and growing competitive strength. Okay, cool. Pretty simple word, and something that we all probably have experienced in the markets, a supervenice of a stock either up or down based on it getting a re-rating. Dude, I'm not saying it wrong. It's Super Venice. There's no freaking way I'm saying this wrong. Do we actually have to see how this one sounds? This one I feel like is easy. Hold on, let's see. Super Venice. Let's see. They're going to make me watch the ad. And then we'll see. Complete math block ready. Dude, I think I forgot how to do math. It's been so long since I've like done math. The only math I know is revenue minus costs equals profit. Like it has been so long since I've done math.
Supervenience.
Okay, that's weird.
Supervenience.
You forgot how to read also. Supervenience? Oh, like convenience. Oh.
Supervenience.
Why didn't any of you spam convenience in the chat? That would have... Oh, you did. Oh, fuck. Okay, that would have... Anyway. Supervenience. All right, whatever. Anyway, thank you all for joining. Appreciate you all. I will see you guys on the close. I'll see if I can get Steve or Chris on. Try to get some more people and get some different perspectives here. But we'll have the Fabrinet earnings. Yeah, and then we'll keep going from there. I think Steve is live. We should spam Steve. Is he late? No. Oh, he just started. Okay, we're going to spam him with I Want to Break Free. Such a good song, dude. Such a good song. I Want to Break Free. If you're going to Steve's stream, that's what you can spam him with.